Yippee, I pushed the right buttons. Okay, we're being recorded, so we all have to clean up our act now. So, any questions before we get started with chapter 2? No? Oh, too late. Go ahead.
For the online quizzes, I had a little issue doing one today, which is fine, but it booted me out and I didn't get credit. That's fine, because I took it again. But is there going to be a way, is there a way that you could allow us, once we're done with that, to like have it displayed so we can use it for a study guide? Or will there be like a study guide test version of one that we can use? Because like once, you know, like once you get your grade, you can't see.
Right, yeah. Yeah, the answer is no. But for those in cyberspace, the 101 students who are floating around out there someplace, the question was, with all those quizzes, can you get the answers rather than just your scores? It tells you the score when you're done, but not the answers A, B, C, D. Doesn't give an explanation. The answer is no. And the reason is different people take them at different times. And although each quiz is different, there's like a pool of questions, you know, a couple hundred questions or whatever, and I tell the computer to select 10 at random. So everybody has a different quiz. But if enough people get together, some people are going to have duplicate questions and they can sell them on the internet or among themselves. And yeah. And so that's why you can't get the feedback. It's too bad because it's great feedback if you could get it, but you can't get it.
So how do you prepare, like she said, for the quiz? Are you going to have a study guide or different?
Well, yeah, the question is, how do you prepare for the quizzes and the exams? What was it, McGraw-Hill website has additional learning opportunities on there. I think they're listed somewhere in the syllabus. There's a link there that if you subscribe to Connect, you get all this stuff for free. And so check out that website. There's lots of learning opportunities there. And even without those, if you just do the exercises and problems at the end of the chapter, those answers are available on Canvas. Yeah. Everything that's listed as a homework assignment is available. The answers are available on Canvas. And I've included some other things on Canvas, other answers that are not part of the homework assignment, so that if you have the time and the energy and the inclination, you can do even more. So,
and you said that the tests are also pulled from McGraw?
Yeah.
So, okay, so,
yeah,
okay.
yeah, the exams are also pulled from McGraw-Hill. Yes?
My question is, if you try to check that every exercise quiz that's listed, they all say expire. So no matter what I get on the test, I don't really know what my grade is, even though it shows me instantly when I get the answer correctly. But all of mine is, and this is just being temporary and not for the ones that are already paid for me. But every quiz that's already up for me in time, they all say expire.
I think it's a temporary, because I've had a temporary, and then I have to purchase it, and it has a mistakes on it.
Okay.
Oh, okay, good. Yeah, because I didn't know what the expired thing was. Yeah, this is the first semester we're using this particular book. We used another one before that didn't have Connect, but in prior semesters we used books that had either Connect or something that's similar to Connect. So there's a few bugs to be worked out. And then we have a new system here. This is a new system we have this semester on our computers, rooms 113 and 114 and maybe 115, I think. And so there's numerous bugs. Plus there's a few new people in ITTS that we have to train. Or they have to train us, one of the two. Any other questions before we get started on chapter 2? Yes?
We have to purchase the Connect to get to do the quiz?
Yes, you have to have Connect in order to do the quizzes. There are a few ways to do that. At the beginning of the semester, a few days before the beginning of the semester, I spoke with the representative from McGraw-Hill, and she said the easiest way to do it is to buy directly from McGraw-Hill on that link that I gave you. Now the problem is somebody bought the books from the bookstore here, and I'm not telling you where to buy your books, but I guess some people are now stuck with 2 books, because if they get Connect, they get the book automatically.
Right, they don't provide the Connect.
Well, they were supposed to, but I guess nobody told them. Now, when I put through the order, like in March or April, I filled out this big form, and it was submitted, but somewhere along the line, somebody dropped the ball. So, but I spoke to the dean this afternoon, and there's no promises here. Don't hold me to this, because she's going to talk to the publisher rep to see if, because of that glitch for this semester, she can give you Connect for free under, because you bought the book, basically, or rented the book. FSU is one of the few schools that has a rental program for books. Usually people just buy the books. So that's a little curveball that McGraw-Hill doesn't know how to deal with yet. But the dean is talking to the appropriate person at McGraw-Hill. Maybe they can work something out.
Purchase or wait?
I don't know. I don't know. But as soon as I get any news, I'm going to send it out as a broadcast announcement.
So if it's past the due dates for the quizzes?
Well, if it's past the due dates for the quizzes, I'll give you new quizzes.
Okay.
That much I can guarantee, because I know how to do the quizzes now. There were a few glitches in that system too. But yeah, if you have Connect now, you can take the quizzes. The deadline for Chapter 2 is this Sunday at 11:59 p.m. New York time. And if for some reason, if you can't get on Connect by then, I can make more quizzes. Like nachos, you can make more, right?
Lastly, sorry, I don't know if you guys tried the practice test, but the practice test basically instructs you on the module and how to get through it, and it tells you if you get ready to this, if you want to time out, whatever. So it says that you can time out, right? So hey, you got an emergency phone call, you can hit save and continue. Well, I have a puppy that should probably be at the vet, but he's at home right now. He's pretty sick. So twice I hit save, right? Save, picked him up, put him outside, put him back in, threw him again, picked him up, put him outside. The second time that I hit save, when I went back in, it won't, I don't know if you can only save it once, but on the second one, it automatically said that this has already been graded, and it only graded what I had done at that point, which is fine because I took it again and it was fine, but so I don't know if you can only save it once, and then the second time it just grades whatever you have.
Yeah, for those in cyberspace, again, look at the practice quizzes at the end of each chapter. They'll sort of walk you through the system, show you how it works. And I'm giving generally 3 quizzes for each chapter, and only one of them counts, the one with the highest grade. So really 2 of them are practice quizzes. That's why I'm eliminating practice quizzes, because what if you get 100 on the practice quiz and you only get 40 and 50 and 30 on the real quizzes, You're sort of screwed. So this time, instead of having practice quizzes, take the 3 quizzes for a grade. I only count the highest grade. And it turns out that the other 2 were practice quizzes. You just didn't know it at the time. That way, it's to your benefit, and it's a win-win situation, right? According to utilitarian theory, it's a win-win game. Shall we get started with Chapter 2? It's going to be really good, folks. It's going to be huge. Here we go. Okay. Well, I don't know about huge, but the material in Chapter 2, and starting from now on, we're going to crunch numbers. Every chapter, we're going to crunch numbers. There's going to be some theory. It's always nice to understand why you're crunching the numbers. But basically, this is a number crunching course. And I really like Chapter 2 because they're little numbers. And also, it's easy to understand what's going on as we progress. Each chapter is on a different topic. Some chapters are going to be easy, and some are going to be a little less than easy. But this chapter is one of the easiest because it's Chapter 2. And it has some nice numbers, and they're small numbers. So it'll give you a little flavor. And if you've had the financial accounting class recently, like within the last year or 2, I won't ask how many have. It's going to be even easier because they talk about income statements and things. If it's been 5 or 10 or 20 years since you had the financial accounting class, you'll have to maybe refresh a few things. But we're going to go over that too. There's 2 kinds of income statements in Chapter 2. There's what they call the traditional kind. That's the kind you had in your financial accounting class, where you have revenue minus expenses equal to net income, basically. That's the traditional approach. In management accounting, there's another approach called the contribution approach. That's the kind we're going to stick with pretty much. We're going to compare the 2 to see what the differences are, because there are some differences. But let's get started. I'll push a few buttons and see what works here.
Dr. McGee, can you hear me?
I can just barely hear you.
This is Mary Callahan-Lopez. I just have a quick question, and I'm sorry to interrupt you, but I had two questions. My microphone was off a second earlier, so I don't think you could hear me when I was trying to ask. But two questions. The first is, when you were referring to the efforts to try to get the Connect for students who rented the book, is that for textbooks that were rented only through the university, or will that be for textbooks that are rented from any website?
I'm pretty sure it's only those rented at the university.
Okay. Okay, and my other question is, when you spoke about the chapter questions that you were giving us as examples for the highlights of the chapter, my question is, will the questions for the exams, will they come from the concepts from those questions, or will all of the concepts from the entire chapter possibly be on the exams?
Well, there's going to be a lot of overlap. The questions that are on the exams and the quizzes will probably not be identical to the ones that are in the book. But a lot of times what the authors do is they just change the names and numbers and dates, or sometimes they mix it up and change the fact situation a little. So the things you're getting in the study materials will prepare you for the quizzes and exams, but the questions won't be identical. They probably will not be taken from the same pool.
Right. I didn't mean like identical questions. I just meant in the last lecture, you referred to homework questions that would reflect what you considered the highlights from the chapter.
Oh, yes.
And so I didn't know if that meant that the exam questions would be more reflective of what those concepts are, or if all of the concepts in all the chapters for each exam would be fair game for the questions.
Okay, yeah, I see. Yeah, the reason I chose those exercises and problems is because I thought those were the most important topics. And what I planned to do, up until you asked that question, was to do the same thing on your exam that I have done on the quizzes. The publishing company provides a pool of questions, maybe a couple hundred per chapter, and I give the computer the command to choose 10 at random. If I do that, maybe some of the questions that the computer chooses won't be on the same exact topics that I listed in the homework assignments. I hadn't really thought about that until you asked the question. Now, the nice thing about the quizzes is they're open book. So even if one of the questions the computer chooses isn't one of the topics I listed, it's still okay because you can look it up. But on the exams, well, on exam number 2, you cannot use a book. Exams 1 and 3, you can do those at home or in the south of France where we happen to be. But for, that's supposed to be my first joke of the night, folks. I guess it didn't work. But for chapter 2, there's no book. So the only time that might have a minor adverse effect is in exam 2, because everything else is open book. And did I mention why exam 2 is worth 30%? Did I mention that last week?
Yes.
Oh, okay. Yeah, for these online courses, there's a rule. I don't know who made the rule. Somebody made the rule that says at least 30% of the grades have to be from some source where somebody's looking over your shoulder, a proctored kind of situation. And so that's why exam 2 is 30%. So we can meet that requirement and check off that box. Why is it exam 2 instead of exam 3? Because if there are any glitches, I don't want it to be on finals week, because everybody's going to be going crazy on finals week anyway. So if there's a glitch and it's in exam 2, we have time to make corrective action. So that's why it's exam 2, that's why it's 30%.
Thank you.
Yep, you're welcome. Let's get started. Yeah, I have to find out what buttons to push, because sometimes I push a certain button, like now I'm pushing a button and nothing is happening here. That's when I go to the mouse, and now I'm clicking and nothing's happening there. There we go. Okay. For these learning objectives, the learning objectives tell you what you're going to learn. So I skip over those sometimes. Rather than talk about what we're going to learn, let's just learn this stuff. Direct and indirect costs. Assigning cost to cost objects. There are basically two ways to look at costs, direct and indirect. Direct costs are the costs that you can trace directly to a product or a service. Indirect costs are costs that are not easy to trace directly, but they're costs, so you have to deal with them. And later on, a few chapters down the road, we'll see how to do that. We can allocate costs. Any allocation formula is somewhat arbitrary, as we'll find out. But as it says here on the slide, direct costs are costs that can be easily and conveniently traced. So again, if the cost of tracing a cost exceeds the benefit, you don't do it. So it has to be easy to do, it has to be convenient. Example, direct material and direct labor. Direct material might be the easiest one. If you make automobiles, the tires would be a direct cost. They're directly traceable to the car. The steering wheel would be a direct cost. The muffler would be a direct cost. It's traceable directly to the automobile. An indirect cost might be the salary of the janitor who sweeps up the floors. That's not traceable to a particular product. Let's say on the assembly line, you make 6 different kinds of car. The janitor goes around and sweeps up the floor from time to time. That's a cost. It's a manufacturing cost, but it's not traced directly to the product. So we have 2 kinds of manufacturing costs, the direct kind and the indirect kind. There are 2 kinds of direct costs, direct material and direct labor. The other manufacturing cost is anything else. That's the definition of overhead, by the way. Anything else. You like that definition? Yeah, there are 3 manufacturing costs, direct material, direct labor, and anything else. What do we call that anything else? Manufacturing overhead. Yeah. Is there any other kind of overhead besides manufacturing overhead? Yes. Administrative overhead and selling overhead. We have manufacturing costs, and then we have non-manufacturing costs. 2 basic kinds of non-manufacturing costs. Administrative costs, like the cost of running an office, and selling costs, like the cost of selling the product or the service. So we have manufacturing costs, we have non-manufacturing costs. 3 kinds of manufacturing costs, direct material, direct labor, and factory overhead. 2 kinds of non-manufacturing costs, selling and administrative. And that's what these next few slides are all about. Again, direct costs, they're easy and convenient to trace. Indirect costs are costs that cannot be traced easily. They can be allocated, but they can't be traced easily. Identify and give examples of each of the 3. I sort of did that already, but let's go into more detail. Again, product cost. I should also mention, speaking of different cost categories, another 2-way classification. A cost can be either a product's cost or a period cost. So let me bounce this one off of you. What kind of cost do you deduct at the end of the period? A period cost or a product cost? A period cost. See how easy this is? Is this great stuff or what? Yeah. What kind of cost do you deduct when the product is sold? A product cost or a period cost? Product cost. You guys are really getting this stuff. Okay. So we have classifications of manufacturing costs. Again, there are 3 categories, 3 subdivisions of manufacturing cost. Direct materials are materials you can trace directly to the product. Direct labor would be labor you can trace directly to the product. Example of that would be the wages and fringe benefits of whoever works on the assembly line. Those would be traced directly to a product. So that would be direct labor. What about the salary of the janitor who sweeps up the floor? What kind of labor would that be? Indirect. And another word for indirect is manufacturing overhead. So manufacturing overhead is any indirect cost involved in the manufacturing process. And there we have some direct costs. The cost of those guys, that's direct. and the cost of the, whatever they make those things out of, flour, I guess, that's a direct material cost. So we have direct labor represented by those two guys, and direct material cost represented by the whatever those ingredients are. Raw materials that become an integral part of the product, and they can be conveniently traced directly to it. And those are direct materials, like the flour and the dough, for instance. Direct labor, those two guys who are working on the product. Wages paid to bakers. Manufacturing overhead is any other manufacturing cost, anything that's indirect, cannot be easily traced directly to specific units produced. Examples for indirect material, material used to support the production process, like lubricants and cleaning supplies to maintain the bakery equipment. Indirect labor, wages paid to the janitor who sweeps the floor and so forth, security guards, cleanup workers. And we also have two kinds of non-manufacturing costs, selling and administrative. Selling costs are involved with the sales process, like the salaries and commissions of the sales force and the delivery trucks that are used to deliver the products they sell. Administrative costs would be the president's salary, salaries of the people who work in the office, depreciation on the office building, things like that. Another learning objective, understand cost classifications. We already know about product cost and period cost. Which costs are deducted at the end of the period? Period cost. That's why they call them period costs. The end of the period might be December 31st, or it might be June 30th, or it might be April 30th. It depends on the period. Product costs are deducted when the product is sold. So let me give you an example. Let's say that you're a retailing business, you buy things wholesale, you turn around and sell them retail. You buy 100 units and you sell 80 units. Your cost of goods sold that's deducted on the income statement, would that be the 80 units you sold or the 100 units you purchased? You bought 100 units, you sold 80, you didn't sell 20. When you're deducting cost of goods sold, how many units are you deducting? 80 or 100? 80. Because it's a product cost. Yeah, you deduct it when the product is sold. If you buy 100 and you sell 80, it means you have 20 left in the ending inventory. What happens to those 20 that are left? I just told you.
Ending inventory.
Yeah, they become part of ending inventory. Inventory is an asset. The assets appear on the balance sheet. Although in the case of inventory, they also appear on the income statement, right? Remember what the three main components are of cost of goods sold? Is it an unfair question because you had it 10 years ago? Yeah. Well, here it is. Write it down. Cost of goods sold equals beginning inventory plus purchases minus ending inventory. You just got ahead of me. That's because you're too fast. Yeah. Cost of goods sold, three components. Beginning inventory plus purchases minus ending inventory. That's cost of goods sold. So we have four variables there. If the authors gave you any three of those four, you should be able to figure out the fourth one, right? Using algebraic manipulation. Uh-oh, the A word, algebra. You set the unknown equal to x and solve for it. Remember that? That's one way to do it. Or you could look at it and just massage the numbers till it comes out. That's called the eyeball approach, I guess. We're going to run into that a little bit in this chapter. So again, product costs are deducted at the end. Product costs are deducted when the product is sold. So if you buy 100 units and you only sell 80, you can only deduct the cost of those 80 units. Whereas a period cost, you deduct it at the end of the period. So if you buy 100 units and you sell 80, you still deduct 100% of the lighting in this room because that's not a product cost. Or is it? The cost of electricity that you use to light up the ceiling here in this room. Let's say that instead of this room, it's the sales office. Would you deduct 100% of the cost of that electricity if you bought 100 units and only sold 80? Well, what's the ultimate answer in accounting? Two words. First word is it. Depends. Yes, it depends. If the electricity, the overhead lighting, if the overhead lighting is in the factory building, you would only deduct 80% of it because you only sold 80% of the product. If the lighting is for the sales office or the administrative headquarters, you would deduct 100% because those are period costs. In other words, it's starting to get complicated. Yeah, remember this. There are three manufacturing costs. You put them together, eventually you're going to have cost of goods sold. The only, this is very few times we can say only in accounting, the only product cost you have is cost of goods sold. That's the only product cost. All other costs are period costs or assets. What? There's two kinds of costs, right? Some costs are assets and some costs are expenses. If you buy a car, that's an asset. An asset has value beyond the balance sheet date. That's a quick and dirty definition. An asset is an expenditure that has value beyond the balance sheet date. And expenditure is a fancy word that means you bought something, right? If you buy a car, that's an asset because it has value beyond the balance sheet date. You can have an expenditure for electricity for October. That's not an asset, that's an expense. The quick and dirty definition of expense is an expenditure that has no future economic benefit. Like you pay the lighting bill in October, that's it, has no future economic benefit. If you buy a car, that has future economic benefit because you can use it for a few years. So expenditures can be either assets or expenses. And again, this goes back to the course in financial accounting, but I think it's worth repeating because you've had time to forget that course. I mean, maybe a few of you have forgotten a few things about that course, right? I'll just assume that. So again, how many kinds of product cost are there? One. And what is that product cost? Cost of goods sold. Every other cost is either a period cost if it's an expense or an asset if it's not an expense. Did you get that when you read the book?
No.
No. I'm just trying to show you that I have value. But, yeah, you're not just listening to the wind here, hopefully. Oh, look at that. We have T accounts. Are we going to have T accounts in this class? Very few. Not as many in this class as you had in the financial accounting class. I don't know if that's good or bad, but we're not going to have too many T accounts. We're going to have journal entries in this course. A few, not too many. Again, I don't know if that's good news or bad news. Sometimes I think I'm the only one in the class who likes journal entries. Well, let's take a look at this slide. Product costs versus period costs. What kind of balance is in the inventory account? A debit or a credit balance? Remember, debit means left, credit means right. Inventory has normally, if you have inventory, is it either a debit or a credit balance? I'll give you a hint. Begins with D. Debit, yeah. There are two kinds of accounts. This is starting to look like a review of financial accounting, but that's okay. There are two basic kinds of accounts that have normal debit balances, assets and expenses. Inventory is an asset. Assets have debit balances, except sometimes. We don't have to go there. And so when you reduce inventory, you do that with a credit to the inventory account. When you sell inventory, you credit inventory, and what do you debit? Cost of goods sold. Now, there's the person who said cash is correct, by the way, too, because there's two things going on here. We have to record the sale, and we have to record the cost of the sale. When you record the sale, if they pay cash, you debit cash, and you credit some revenue account, like sales. That's recording the sale. Recording the cost of the sale, you debit cost of goods sold, and you credit inventory. So the person who said cash was also correct, because there are two correct answers to that question the way I asked it. I should have asked it differently. So there's only one correct answer. Okay, inventory goes on the balance sheet because it's an asset. Again, there are three kinds of accounts that go on the balance sheet. What are they? Assets is one of them. Liabilities and owner's equity would be the third one, right? Three kinds of account that go on the balance sheet. Assets, liabilities, and owner's equity. sometimes called stockholders' equity, sometimes called shareholders' equity. All three of those mean the same thing. Let's see. In British English, stock means inventory. How many people are here from the British Empire? Show of hands. Huh? I won't hold it against you. You don't get extra points for it either. I'm just asking. Okay. So that's it. Then there are 5 types of accounts altogether. 3 of them are on the balance sheet: assets, liabilities, and stockholders' equity. The other 2, revenue and expense, go on the income statement. Those are the only 5 types of account we have. Did I just lie to you a little bit? Yeah, it depends. We also have contra assets. Remember those? Contra liabilities. Yeah, but not in chapter 2. So I'm just giving you a little review, a little warm up here. Product cost versus period cost. You already know what that is, right? Expenses go in the income statement. Period costs are expenses. So period costs go in the income statement. Product costs, they can go in either the income statement or the balance sheet. It depends on whether you sold it. Like in that example I gave you, if you bought 100 units and you sold 80, the cost of those 80 units goes on the income statement as part of cost of goods sold. The cost of the 20 that you didn't sell becomes ending inventory, and that appears on the balance sheet. And period costs include all selling costs and administrative costs. Those are period costs. How many kinds of product costs do we have? 1. And what is that cost? Cost of goods sold. Yeah. It seems like I'm repeating myself here, right? Yeah, there's a reason I'm repeating myself. Yeah, sometimes when I repeat myself, it's because I forgot I said it before. And other times it's deliberate because repetition is good sometimes. And I'll let you figure out which reason it is each time. So old people repeat themselves. Have you noticed that? So I don't feel old yet. Sometimes when I get up in the morning. Quick check. Oh, here we go with a little quiz question. Which of the following costs would be considered a period rather than a product cost in a manufacturing company? So again, a period cost is a cost that's deducted at the end of the period. Has nothing to do with how many units you sold. If you bought 100 units and you sold 80 or 110, if you bought 100 units, could you sell 110?
Yes.
Yeah, from last year. Maybe you had some in the warehouse that were left over. So we want to see what's a period cost, what's a product cost. So a manufacturing equipment depreciation. Would that be a period cost or a product cost?
Product.
Begins with P.
No, product.
It's part of the manufacturing process, right?
They're both solid.
Yeah, that's good. Good. That's my second joke of the day. Begins with P. Yeah. Remember, product costs or manufacturing costs are product costs. If it's not a manufacturing cost, it's a period cost. So for part A, manufacturing. Sometimes I repeat myself. Manufacturing equipment depreciation. Product cost or period cost?
Product.
Product cost, because all manufacturing costs are product costs. Part B, property taxes on corporate headquarters.
Period.
That's a period cost because it's not part of the manufacturing process. Part C, direct material costs. That's a product cost because it's one of the 3 manufacturing costs. Part D, electrical cost to light the production facility. Product cost because it's a manufacturing cost, right? If it's a production facility, we're talking about manufacturing. Manufacturing costs are product costs. You can write that down. Manufacturing cost equal product cost.
Because it's where the product is being assembled or produced or whatever, right?
Yeah, there are 3 kinds of product costs: direct material, direct labor, and every other manufacturing cost, the overhead costs. Yes?
And homework, administrative equipment depreciation period cost? Is that the next one? And it wasn't.
Yeah, administrative depreciation. Let's say the president's desk. That would be an administrative cost. You depreciate the president's desk. That would be administrative depreciation. That would be a period cost. Yeah. Any administrative cost is a period cost. Any selling cost is a period cost. Manufacturing costs, those 3 kinds, are product costs. You're welcome. So for part D, electrical cost, like the production facility, that's a manufacturing cost. Therefore, it's a product cost. And E, sales commissions. Period cost, because that would be a selling expense. So we have manufacturing expense, 3 kinds: direct material, direct labor, and overhead, factory overhead, I should say. And the other 2 kinds are non-manufacturing costs, selling and administrative. Those would be period costs, deduct at the end of the period. So it may seem like I'm beating this to death, but if this is new material for you, it's worth repeating 5 or 10 or 20 times. Which of the following costs would be considered a period rather than a product cost in a manufacturing company? And there they are. B and E, those are period costs. The other 3 are product costs. Classifications of costs. This this question was on a CPA exam once that I saw. Manufacturing costs are often classified as follows: direct material, direct labor, manufacturing overhead. The 2 that are considered prime costs are direct material and direct labor. The 2 that are considered conversion costs are direct labor and overhead, manufacturing overhead. So if you take direct material and you convert it into a finished product, that's why they call it a conversion cost. What do you have to do to convert raw materials into a finished product? Add labor and add other stuff. So that's why they call those other 2 conversion costs. So the question that was on the CPA exam was, which element of manufacturing cost is both a prime cost and a conversion cost? Direct labor. So you now know how to answer at least one CPA review question. Unfortunately, they don't ask the same question every time they give the exam. But if you would have taken this 15 or 20 years ago, you would have gotten this one right, because it was on many years ago. But they do repeat. So it's good to know, because you're all going to take the CPA exam, right? Yeah. Okay. Yeah, if I say it often enough, you'll start to believe it, right? That's, I think Joseph Goebbels said that. Huh? Who is Joseph Goebbels? The propaganda minister in Nazi Germany. He says if you repeat a lie often enough, they'll eventually believe it. Yeah. Accounting is so easy. Accounting is so easy. Accounting is so easy. You believe it yet? Or should I keep saying that? Okay. Understand cost classifications used to predict cost behavior. Oh, this is good stuff. Now we're getting into microeconomics, which I'm sure you were waiting with bated breath for us to get into microeconomics, right? We have variable costs, fixed costs, and mixed costs. The variable costs changes with the level of activity. Hi, Julius. I see you on the screen there.
Hey, hi, how's it going?
Yeah, yeah. Get that beer out of your hand. Yeah. Can you see him, too? Yeah, there he is. Say hi to Julius. Okay, there we go.
Hello.
So where was I? Oh, yeah. Variable costs are costs that vary with the level of activity. For an automobile, for instance, how many mufflers are there on automobiles? 1 or 2, depending on if you have a hot car or not, right? Let's say there's 1 muffler per car to keep it easy. If you produce 1 car, you've incurred the cost of 1 muffler. If you produce 1,000 cars, it's 1,000 mufflers. The more cars you produce, the more you're going to have to pay for mufflers. That's a variable cost. It varies with the level of activity. For fixed costs, it's going to be the same cost regardless of how many units you produce. Let's say you have a factory and you rent the building for $10,000 a month. If you make 1 product, how much is your rent? 10,000. You make 5,000 products, what's your rent? 10,000. That's a fixed cost. Fixed cost remains fixed or the same regardless of the level of activity. A mixed cost is a cost that has elements of both fixed and variable. Can you think of an example of a mixed cost? Well, let me rephrase the question. In shopping malls, whoever owns those things, they rent out space, right? And let's say that you rent a space It's $10,000 a month plus 1% of sales. A lot of times they do that, where it's a fixed amount plus a percent of sales. So let's say you rent one of these spaces, you pay $10,000 a month plus 1% of your sales. What kind of costs could we call that? Mixed. That's an example of a mixed cost. Another example might be electricity. Is electricity fixed or variable or mixed? Well, let's say you have a factory building and the lights are on 24 hours a day, 7 days a week. Lights on the ceiling. If you produce 1 unit, do those lighting bills change? If you produce 10,000 units, is the lighting the same?
Yeah.
Yeah, for the lights on the ceiling, right? That would be a fixed cost. Let's say you use machinery that's run by electricity to produce stuff. That would be a direct relationship there between the cost of running the machines with electricity and the number of units you produce. So electricity can be either fixed or variable. And if you have a factory, the overhead lights would be fixed, but running the electricity through the machinery would be variable. So that would be another example of a mixed cost. Is this great stuff or what? Or what I mean, okay. I try to take all conversion opportunities. Cost classification, that's a fancy little thing there. We already know those. Variable, fixed, and mixed. Where have you seen a graph like that before? Begins with M. Microeconomics, yeah, everywhere. Now, this is one way that you could graph a variable cost. If you, let's say that you're producing something, if you don't produce any units, you don't have any cost. That's why this starts at the origin here. For those in cyberspace, you don't know where I'm pointing maybe, but it's where the horizontal and the vertical line meet. That's called the origin. And so a variable cost, if you don't produce any units, you don't incur any variable costs. If you're an automobile manufacturer and you don't produce any cars that day, your cost for mufflers is 0. So it starts at the origin. The more mufflers you produce, the more you go up this line. It doesn't have to be a 45-degree angle. It just depends on how the numbers are on the thing. The quantity would be on the horizontal line, and cost, dollars or euros or something, would be on the vertical line. So a cost that varies in total and direct proportion to changes in level of activity. In some cases, texting, if they charge you 5 cents per text message or something, that would be a variable cost. You can reduce that cost by not texting if they charge you on a per text basis. They didn't have that example when I was in school. We had telephones with wires. You ever see one of those? A telephone with a wire? Maybe they're in a museum. Variable cost per unit. Well, if each muffler costs $23, the more mufflers you buy, the higher your total cost. But what's the cost per unit? Does the cost per unit change if they're $23 each? No. So if you wanted to draw a graph that showed what the cost per unit is, it would look like this. It would be a straight horizontal line. Cost per unit remains the same. In real life, does the cost per unit remain the same? If you buy over 100 units, maybe they give you a discount, or maybe it's free delivery, or like Amazon, if you buy more than a certain amount of books, it's free shipping, stuff like that. So for purposes of accounting, we're going to pretend that these lines are straight. But if you read the chapter, you know that economists have a different way of looking at things, right? For economists, a lot of lines are really curvilinear, which is a fancy way of saying not straight. Why not say curvilinear? When you can say not straight, no, curvilinear sounds so much better. And if you're in business, you can charge clients higher fees if you use those big, fancy, highfalutin terms. So maybe there's a little cynicalism there, but charge high fees by baffling your clients and saying, please, please solve my problem. Cost driver, a measure of what causes the incurrence of a variable cost. Units produced might have something to do with it. The more units you produce, the higher your cost. Or maybe machine hours. The more machine hours you have, if you have one machine and you run it for 1 hour, that's a machine hour. If you have 5 machines and you run each of them for 1 hour, how many machine hours is that? 5, okay. Miles driven, you know how that works, right? Every mile you drive, it costs you 53 cents or 22 cents, whatever it costs. And labor hours, 40 hours. Gets a little complicated if it's time and a half. So we're going to get to that in about maybe chapter 8 or 10 or something. But it'll be a straight line though, guaranteed. Just might have a slope. Fixed costs, this is how you would draw the curve for fixed cost. Isn't that the same as what we had for the variable cost per unit? Variable cost per unit remains the same. Fixed cost remains the same over some level of activity. Let's say you have a factory that you can only produce 10,000 units a month because that's all it'll take. So between 0 units and 10,000 a month, that would be called the relevant range. What if you had orders for 14,000 units and you can only produce 10,000 in that factory? What do? Rent more factory space. If that's the case, you'll have 2 horizontal lines. The first one will be here and the next one will be a little bit higher. And if those are close enough together, we call those a step function, because when you see a series of lines, it goes, one goes here, and then one goes there, and one goes here. It looks like steps. That's why they call it a step function. So this one is just your straight, ordinary, run-of-the-mill fixed cost curve. Regardless of the level of activity within the relevant range, you know, if you pay $10,000 a month in rent, it's going to be $10,000 a month, regardless of how many units you produce. Fixed cost per unit, on the other hand, declines with the number of units you produce. I should warn you about this, though. There are very few uses for whatever number you come up with, fixed cost per unit, when you're making decisions. So let's say you have an automobile factory. On January 2nd, when you open up for business, it's going to cost you $1 billion in rent and other kinds of fixed costs. So you open up the doors, January 2nd, costs you $1 billion in fixed costs for the year. If you produce 1 car, what's your fixed cost per unit? $1 billion, right? What if you produce 2 cars? What's your fixed cost per unit then? So it's only 500 million, right? If your total fixed cost is $1 billion for the year, and you produce 2 cars, the fixed cost per unit is only 500 million only. What if you produce 4 cars? Then the fixed cost per unit is only 250 million. So you see where I'm going here, right? Fixed cost divided by the number of units gives you the fixed cost per unit. How would you graph that? Oh, just like this. That's why that graph is downward sloping. If you only produce 1 car and your fixed cost is $1 billion, the fixed cost per unit is $1 billion. If you produce 2 cars, your fixed cost per unit is only 500 million. If you produce 10 cars, your fixed cost per unit is only 100 million, right? So it's whatever the fixed cost is divided by the number of units, that would be your fixed cost per unit. Again, I warn you about using these figures for making decisions, because it can screw you up and you get the wrong decision sometime, as we'll see a few chapters down the road. But I'll give you the warning now. Whatever that number is, fixed cost per unit, is not only meaningless, but it's actually dangerous to use that number. Because if you want to come up with optimum decisions about things, and in a few chapters we'll see what some of those things are, that unit could lead you astray. Yep.
It's meaningless. Why do you know it?
Very good point. I think because the author wants to set you up so he can show you why it's meaningless later. Not only meaningless, but dangerous. It's better to know nothing than to know the wrong thing, right? This is one of those, you're better off not even doing that slide. But because in practice, some people who don't know much about accounting, they look at these fixed costs, and they say, oh, if we produce another unit, we can drop our unit fixed cost by $500 million. And so they produce 2 units, even though they can only sell 1. I mean, that's an exaggeration, but it's to show the point. So now you know what they are. You know to watch out for these things. And in a few chapters, we'll show you some examples of what can go wrong if you pay any attention to that calculation. Types of fixed costs. We have two kinds, committed and discretionary. Committed fixed costs means you cannot get out of them. Long term, cannot be significantly reduced in the short term. Of course, as you know from economics, everything is variable in the long run. Remember that one? Difference between long run and short run in economics? In the long run, all costs are variable. We're not going to go there in this course because this is just number crunching, accounting stuff. The theory in accounting is not as deep as the theory in economics. So if you can understand economic theory, you're in great shape. If not, it may not matter. So committed fixed costs is long-term. Some examples, depreciation on buildings and equipment and real estate taxes. If you own a building, you own a building. The only way you can change that fixed cost is by selling the building. Then you have discretionary fixed costs. These are things that you can alter in the short term, like advertising and research and development. Let's say this year you have an advertising budget of $5 million. It has no relationship to sales. I mean, hopefully if you spend $5 million on advertising, sales will go up. That's what you're hoping. But regardless of what sales are, your advertising costs are $5 million. So it's a fixed cost. Well, that's for this year. Next year you can change that. You can make it 8 million or you can make it 2 million. You can change it. That's called the discretionary fixed cost. Over the long run, you can change it if it's discretionary. Same with research and development. If you're a pharmaceutical company, you pay these expensive scientists $2 billion a year in salary, that's a fixed cost. Regardless of what sales are, they're going to get their $2 billion off the top. But that's for this year. Next year, you can cut back and just pay them $1.5 billion. Not by salary cuts, but by firing 25% of the scientists. Or you can hire more scientists so that you now pay $3 billion a year. Those are discretionary fixed costs because you can change them. They're fixed because they're not related directly to sales volume. But they're discretionary because you can change your mind. Questions? Or am I explaining this so well that you get it the first time? Or are you just numb? Maybe that's it, a little bit of that too, maybe. That's okay. Oh, here we go. The difference between the way an accountant looks at a graph and the way an economist looks at a graph. The linearity assumption and the relevant range. Accountants, for purposes of this course anyway, pretend that lines are straight. Why not? Economists, on the other hand, say, wait a minute, doesn't it really depend on relevant range? Because when you start up an operation, don't you incur other costs that you don't incur later? Like when you reach economies of scale, remember that? Economies of scale. If you reach a certain volume of activity, and again, the learning curve, remember when you're learning something new, you're at the bottom end of the learning curve. The more time and effort and energy you expend, the better you get at it. And so you can produce things more efficiently. If we were to graph all that stuff, it wouldn't be a straight line. It would be a curvilinear line, like the line here, this sort of reddish orange thing here. That's the way an economist would look at things. The way an accountant would look at things is say, well, this is approximately a straight line between here and here, in the relevant range between the left side and the right side of that, whatever you want to call that vertical thing here, the relevant range. So you can approximate reality by pretending that the line is straight within the relevant range. And that's why accountants have straight lines and economists have curvilinear lines. So I'm teaching the econ at no extra cost here. Don't tell the dean. She'll send you a bill for another semester hour tuition or something. But it's good to review this stuff because it is connected. Fixed costs in the relevant range. Again, fixed costs are only fixed within a certain level of activity. Like that example I gave you, if your factory can only produce 10,000 units in the number of square feet it has, but you get a lot of orders and you have to produce 14,000 units, then you rent more space, more factory space. Then you have a higher fixed cost, you have higher rent, but you have more square feet. That's basically what this says. Fixed costs would increase in a step fashion at a rate of $30,000 for each additional 1,000 square feet. For example, assume office space is available at a rental rate of $30,000 per year in increments of 1,000 square feet. And so whatever the relevant range is, it's going to be fixed. But if you increase or decrease the number of square feet, you're going to have a different fixed cost. And that's what it would look like if you graphed it. Between 0 and 1,000, it would be $30,000. Between 1,001 and 2,000, it would be 60,000 and 90,000. And so each of those lines are horizontal. They represent fixed cost, but only within a certain relevant range. As you expand the number of square feet, the cost goes up. And it looks like steps. You can connect them with vertical lines and it look like steps. So they call that a step function if the lines are short. It's just another way of looking at fixed costs within a short relevant range. Questions so far? No? Okay. And here's a summary, cost classifications for predicting cost behavior. Again, you have behavior that cost in total in that one column, and then on a unit basis. Variable costs remain the same on a unit basis, but they increase as the volume of activity increases. Whereas fixed costs remain the same over a certain level of activity, but they decrease as the volume increases, like that line that was downward sloping. And this is just a review, but it's a nice presentation that summarizes everything. Oh, here's another little quiz. Which of the following costs would be variable with respect to the number of cones sold at a Baskin and Robbins shop? There may be more than one correct answer. So the cost of lighting in the store, if they sold more ice cream cones, would the lighting in the store change? No, so that would be a fixed cost. The wages of the store manager, would that change if it sold more ice cream? Only if the manager got a bonus based on a percentage, but they don't say that here, so we can't assume that. So the salary remains the same, at least over the short run. If the manager doesn't sell much ice cream, they maybe get a new manager. It looks like that's fixed in the short run. How about the cost of ice cream? Any relationship to the volume of ice cream sold? Yeah. Yeah, the total cost of the ice cream goes up as you sell more. Cost of napkins for customers, that would go up. The more customers you have, the more napkins you have to use. Would that be a direct or an indirect cost? Cost of napkins. That would be an overhead cost, right? I mean, there's a relationship there. For every ice cream cone you sell, you give them 3 napkins. But if it's in a bowl or a dish, you give them 1 napkin or something. There's a relationship there, but it's not really directly traceable. Or the cost of tracing exceeds the benefit. It's an approximation. And so there we go. The cost of the ice cream and the cost of napkins, those are variable costs. The other ones are fixed. Did you hear that too, or was it just me? Did you hear something go bong? Just me? Mixed costs, we already went over this, but let's see what the authors had to say. Mixed cost, also called semi-variable, it can also be called semi-fixed. Mixed, semi-variable, semi-fixed. They all mean exactly the same thing. A mixed cost contains both variable and fixed elements, like electricity, for instance. Overhead electricity might be fixed. Running it through the machines could be variable. Consider the example of utility cost. I bet you're wondering how to graph that, right? Oh, there it is. Here's the graph. The fixed portion would be the horizontal red line, and it starts above the origin. The origin is where the vertical and horizontal piece meet, right there. And so the fixed cost, if you don't do anything, the cost of utilities is going to be here. If you actually do something, you produce whatever it is you produce. The variable portion is here, but when you add the fixed and variable, this is actually the total cost. And so I can't, it's 45 degrees approximately in this case. That would be the total cost. Total cost has 2 components, right? Fixed plus variable. Total cost equals fixed cost plus variable cost. Is there a formula or equation we can make using that? Total cost equals fixed cost plus variable cost. Do you remember from reading the book? Y equals A plus BX. Remember that one? That's it. Yeah. Well, that's it in accounting. In In economics, it might be y equals a plus bx, or it could be TC, total cost, equals FC, fixed cost, plus VC. What's VC stand for? Variable cost. Okay. See how easy this is? So anyway, that's how you would graph it for a mixed kind of cost. There's a fixed and variable component. Total cost is the sum of the fixed and variable. Oh, look at that. It's an equation. The total mixed cost line can be expressed as the equation y equals a plus bx, where y equals the total cost, TC, in economics, TC, total cost, or the total mixed cost. A equals the total fixed cost, the vertical intercept of the line, and B is the variable cost per unit, and X is the level of activity. So if something costs $3 a unit, B is $3, and X would be the 5,000 units if you sell 5,000. So there are two components of that. Y equals a plus bx, where y is the total cost, a is the fixed cost, bx would be the total variable cost. Again, the B is the dollar amount, $3 a unit, whatever it is. X is the level of activity, 5,000 units. Questions? We have four variables there, right? Y, A, B, X. If I gave you any three of those, you should be able to give me the fourth one, right? Because that's how it works. If you have more than one unknown, then it gets more complicated. But if you have four variables and you know three of them, you should be able to solve for the other one. Here's an example. If your fixed monthly utility charge, charge in accounting means debit if you're doing journal entries, for what that's worth. We're not going to do too many journal entries in here, but we'll do a few. If your fixed monthly utility charge is $40, your variable cost is $3 per kilowatt hour, and your monthly activity level is 2,000 kilowatt hours, what is the amount of your utility bill? You can plug that into the equation, y equals a plus bx. Fixed cost is 40, so a is 40, plus 3 cents per unit, that's b. Level of activity is 2,000, so that would be the x. You plug it in, 40 plus 3 cents times 2,000 is $100. That would be the total cost. Sort of like an Algebra 1 question, right? Only it's easier than most. Do they have this kind of stuff from the CPAs? Yeah, a little bit. Just so nobody gets a zero. It's my attempt at humor. How much do you need to pass the CPA exam? What percent? Anyone know? 75. Yeah. How would you like to hire a brain surgeon who was only right 75% of the time? Well, you can hire a CPA who's right 75% of the time. Of course, you can look stuff up. So in practice, your success rate is hopefully higher than 75%. But on the CPA exam, there's no books. So you need 75% to pass. Analysis of mixed costs. In account analysis, each account is classified as either variable or fixed based on the analyst's knowledge of how the account behaves. The engineering approach classifies costs based upon an industrial engineer's evaluation of production methods and material, labor, and overhead requirements. We don't have to get into the details on that. So analyze a mixed cost using a scatter graph plot and a high-low method. We make the assumption here that costs are linear, that fixed costs are fixed within the relevant range, and that variable costs on a unit basis are also fixed. That may or may not be a good assumption, because what if you get quantity discounts 30% of the time? Then it's not going to be a straight line exactly. But let's not go there. Let's just, I throw that out for your consideration, just because in the real world, sometimes that kind of thing happens. So let's take a look. For the high-low method, let's say you have monthly statistics, a dollar figure and the volume of activity, January through December. You have 12 figures. How many of those figures do you use when you're using the high-low method? You have figures for January, February, March, all the way through December. You have the cost figures and you have the volume level of activity. You only use two. Now, you use the high one and the low one. Why do they call that the high-low method? You can see, right? You only choose the high and the low. And the other 10, if it's a 12-month thing, you just ignore it. So here's an example. Assume the following hours of maintenance work and the total maintenance cost for 6 months. So we have January through June. Look at column D, hours of maintenance, 625, 450, 700, blah, blah, blah. Which one is the highest? June, 850. And the lowest is February, 450. So the high is June, the low is February. So we take the 850 and the 450, and we take the dollar figures associated with that, 9,800 and 7,400. We subtract the lowest from the highest in each case, and then we divide, and we get something. What do we get? Well, let's see what we get. Well, first of all, there's a scatter graph. With the scatter graph, you draw a graph and you put little dots or the figures of your choice. Here it looks like diamonds or something. You notice that if you connected those dots, it would be almost a straight line, but not quite. If variable costs were exactly the same per unit and the fixed costs are exactly the same in total, those would form a straight line. So there's something going on there. Maybe they're getting quantity discounts. Sometimes maybe they have 2 or 3 or 10 different suppliers where the unit cost is a little different. There are a number of reasons why the line might not be straight if you connected the lines or the dots. But in a scatter graph approach, which I'm not going to test you on the scatter graph approach because it doesn't lend itself to multiple choice questions. Back in the old days, when I used pencil and paper, I could have students draw a scatter graph. But now with multiple choice, you're sort of off the hook. But it's nice to know what they are. This should approximate a straight line if you connected the dots, unless there's something going on, if there's a lot of volatility in prices or something. And one way to determine that is to look at a scatter graph to see how close this comes to a straight line. And there's a way to figure where the straight line should go if you decided to draw a straight line through, because some dots would be above the line, some would be below the line. There's a mathematical way to figure out what the slope would be. We don't have to do that here. Sorry. It's just, you know, we're not going to do everything that could possibly be done. Like there's a formula for slope. That's, you study that in mathematics and economics and stuff, but for accounting purposes, we'll just stick with this presentation. So we have February and June. June is 850, February is 450. The difference between 850 and 450 is 400, so that's the change. And for the dollar amount, 7,400 versus 9,800, the difference here is in dollars 2,400. So if you want to figure out the cost per unit, you take dollars divided by units, 2,400 divided by 400, or if you chop off 2 zeros, 24 divided by 4, that'd be $6 a unit. So the variable cost is $6 a unit. See where that came from? You see where the 400 came from? Difference between the high and low for the hours of maintenance, $2,400 difference in dollars between the high and low maintenance. $2,400 divided by 400 units is $6 per unit. That's the variable cost. So for any level of activity, if you know what the fixed cost is, fixed cost plus $6 a unit times the level of activity will give you the total cost. We now know the variable cost per unit, and we know the total costs, so we can figure out what the fixed cost is because we know everything else now. The variable cost per hour of maintenance is equal to the change in the cost divided by the change in hours. $2,400 divided by 400 units, $6 an hour. So if the total fixed cost equals the total cost minus total variable cost, remember we have the 3 things going on here. We have fixed cost plus variable cost equals total cost. Those are 3 things. If you take the total cost and subtract the variable cost, you'll get the fixed cost. Again, 3 variables. If you know any 2, you should be able to do the other one. So the total fixed cost equals the total cost minus the variable component. So if the total fixed cost is 9,800, you subtract the total variable cost, $6 an hour times, you can choose either the 850 or the 450, doesn't matter. It's going to turn out to be The total fixed cost is 4,700. So when you're trying to figure out the total fixed cost, you can choose the high numbers or you can choose the low numbers. You should get the same thing because fixed costs should be fixed. They should be the same at the high or the low point. And if you want to check your work, you do both. You plug in the high numbers and you plug in the low numbers. You should get the same amount, 4,700. If you don't, it means you did something wrong. So the variable cost per unit, $6 an hour. The total fixed cost, 4,700. Now we can predict the total cost for any level of activity within the relevant range by just taking 4,700 plus $6 times whatever the level of activity is. Y equals A plus BX. We know what Y is, 4,700. We know what B is, $6. And X, we can figure out what our level of activity is. When we plug that in, we'll know the total cost. Questions so far? Am I going too fast?
No.
Too slow? Half fast?
Perfect.
There's an attempt at humor again. If I have to point it out, I guess it's not humor.
We are within the speed limit.
Oh, thank you. Okay, so there's the equation. Again, Y equals A plus BX. A is 4,700, B is 6, X is whatever the level of activity is. Plug that in for any level of activity within the relevant range, and you'll get the total cost. So here's one for you. Sales, salaries, and commissions are $10,000 when 80,000 units are sold, and 14,000 when 120 units are sold. Well, you know where this is going, right? The difference between 14,000 and 10,000 is 4,000, so that's dollars. Difference between 120,000 and 80,000 is 40. So 4,000 divided by 40,000 is 10 cents. So we figured out something, but what is that? Well, using the high-low method, what is the variable portion of sales, salaries, and commissions? That would be B, right? 10 cents. Yeah, 14,000 minus 10,000 is 4,000. 120,000 minus 80,000 is 40,000. So 4,000 divided by 40,000 is 0.1. So the answer is B. Oh, I hope I'm right. Otherwise, I'd be so embarrassed. Well, there it is. Yeah. Questions on that? Where did that come from? 14,000 minus 10,000 divided by 120,000 minus 80,000 is 0.1, right? 14 minus 10 divided by 120 minus 80. You can have a fraction there with.
I just had it the other way. They had the 40,000 on top. Actually, on the bottom.
Whoops. So you got 10 instead of 0.1. Okay. There's all kinds of opportunities for making mistakes here. And that was one of them. So here we go. The difference then, 120 minus 80 is 40, 14 minus 10 is 4, 4,000 divided by 40,000 is 10 cents. If you want to know the cost per unit, cost goes on top, units go on the bottom. That's how you can figure out which one goes on the top. If the goal is to find cost per unit, the cost figure, dollars or whatever it is, goes on top, and the other stuff goes on the bottom. So 10 cents a unit. Sales, salaries, and commissions are 10,000 when 80,000 units are sold, 14,000 when blah, blah, blah. So using the high-low method, what is the fixed portion of salaries, sales, salaries, and commissions? Well, if we know what the variable is and we know everything except fixed, we can choose fixed or figure out what fixed is. So the total cost equals the total fixed cost plus the total variable cost. 14,000 is the total cost at that level of activity. And the total fixed cost plus 10 cents times 120,000 units gives us the total fixed cost of 2,000.
You're saying it would be the same if you chose the other set of data as well?
Yeah.
10 and 80,000? Does that trip me up on the quiz?
Yeah, you can
interchange because the
yeah.
percentages are the same.
Yeah, when you're plugging these numbers into the formula, you can choose the high numbers or the low numbers, and the fixed cost will be the same because it's fixed. If it's different, you made a mistake. Because fixed cost should be the same regardless of whether you choose the high or the low. It should be the same number. Least squares regression. I'm going to discuss this, but I'm not going to test you on it. Now, does that mean nobody's going to listen? listen, because in the real world, you might have to do this. Now, the nice thing is, if you have a fancy highfalutin calculator, if you know which buttons to push, this will come out automatically. In my day, we didn't even have calculators because that was trees and pencils were new when I came out. Yes, who said that? No. Okay, go ahead.
Like on the exam, are we able to have a cheat sheet of the formulas or not?
Good question. You've heard about my prior exams, apparently.
I don't know. I'm just-
I didn't? Oh, okay. Well, the word cheat sheet means there's something unethical going on. What you mean is one sheet of notes, is what you meant to say, right? Okay. Well, in the past, what I've done is for prior semesters, all exams were closed book, no book. But you could have one page of notes, 8.5 by 11 on one side, unless you lived outside the United States and it was A4 paper. It could be in the font of your choice. So if you can read 6-point or 8-point font, be my guest. That was the rule before this semester. Now, for this semester, the first and third exams are going to be open book, open notes, just like the quizzes. Yeah, exam number 2, for that one, no book, but you can have one page of notes, 8.5 by 11, one side, in the font of your choice. Single space, no margins if you don't want margins. Totally up to you, whatever you can read. The nice thing about having that one page of notes, though, you have to figure out what's important to me. And by the time you figure out what's important and you put it in and you write it down or type it out, you'd be more efficient. You already know a lot of the stuff that's in that one page. So it's a learning opportunity too. It's my way of giving you an extra learning opportunity, sort of below the radar. It's a little trick. But yes, you can have one page of notes for the closed book exam. So anyway, this least square method, with the scatter graph method, it's nice. You can see where the line should go, maybe if it's almost a straight line. The nice thing about the high-low method, it's easy. The problem with the high-low method, it's not as accurate. A more accurate method is the least squares regression method. For that one, though, you have to use all the data. For the high-low method, we only use the high and the low. So if you have monthly data for 12 months, we're using 24 pieces of information, right? One for the dollars and one for the volume. 24 pieces of information. High-low method, we only use 4 of those. The least squares regression, we use all of them. And with least squares, you don't necessarily assume it's a straight line. And so if you're trying to get the unit cost, if you use the regression method, you're going to get a number that's a little different than if you use the high-low method. The regression number is more accurate. So if you're doing this for a major corporation where there are millions of dollars or billions of dollars involved, you would use the least squares regression method, or you should anyway. There's a little formula for that. I mean, when I went to school, we didn't have calculators, so we had to use pencils. And we had this x square and the x bar and minus this and divide by that. Ugh, glad that's over. Just get a calculator that has this if you need it. You won't need it for this class, but keep in mind the high-low method will give you an approximation. If I ask you what's one advantage of the high-low method, the advantage is that it's easy. What's one disadvantage? It's not as accurate as the least squares regression method. You might have had this in one of your math classes. How many have had least squares regression before? Show of hands. Nobody? There was one that was almost raised there.
Is it the same as linear regression?
Yeah, it's pretty much the same as linear regression. Yeah, they're close cousins. Yeah. So it's similar calculations. But the nice thing about this method is it's a more accurate estimate. The bad news is it's more difficult unless you have a fancy highfalutin calculator and you know what numbers to push in to press.
Dr. McGee, we'll be able to use those as letter calculators too.
Yeah, you can use any kind of calculator you want as long as it's not capable of text messaging.
Oh.
Yeah. And programming, you can't program numbers in. And those instructions are given to the proctors. So some people find ways to get around that, but there's always a way to get around something. It's usually other people who come up with it, not me. So, but there are ways, yeah. We have ways of doing things. Comparing results, well, we already went over that. Comparing results, the high-low method is easy, but it's not as accurate. The regression method is better, but a little more complicated. Prepare income statements for a merchandising company. A merchandising company is a company that buys wholesale and sells retail. They don't make their own stuff. They buy stuff that someone else has made, and they turn around and sell it, hopefully for a higher price. And we're going to use two approaches to this income statement. The traditional approach is the kind you learned in the approach you used in the financial accounting class, where you have revenue minus expense equals cost or equals net income, or it could be sales minus cost of goods sold equals gross profit, minus selling and administrative equals operating income, plus or minus non-operating income and expenses equals income from continuing operations, and then you have discontinued stuff and taxes, and then the bottom line is net income. Remember that?
Yeah.
Yeah, it's complicated, but that's the traditional approach. Contribution approach is easier. Isn't that good news? Well, we'll see. Sometimes I lie to you just to make you feel at ease. We'll see if this is one of those times. Here's the approach. On the left, we have the traditional format where you have sales minus cost of goods sold equals gross margin. Some companies call it gross profit. It means exactly the same thing. Gross margin, gross profit, minus selling and administrative expenses. Whatever's left is called net operating income. And then you have non-operating income and taxes and all that. We won't go there. It's only chapter 2. That's used primarily for external reporting, which is another way of saying use this for financial reporting, not for management accounting. On the right side, the contribution format. This format can be used to help you make decisions about a wide range of things. What you do is you separate the cost into the fixed and variable components. You start off the same, sales, and then you subtract variable expenses. Whatever's left is called contribution margin. That $40,000 contributes toward meeting your fixed costs. In this case, fixed costs are $30,000, so you have $10,000 left. That's net operating income. Same bottom line, either way it's 10,000, but for management accounting purposes, the contribution format is better because it helps you to see what your profit margins are and break-even points and all that stuff. It breaks it down into fixed and variable. Whereas in the traditional approach, the fixed and variable were sort of merged together, like cost of goods sold, for instance. Cost of goods sold has a fixed component and a variable component because it's those three manufacturing costs. Remember what they are? Yeah. Direct and indirect, right? Direct material, direct labor, and manufacturing overhead. Some are fixed, some are variable, some are mixed. What are two other words for mixed costs? Semi-variable and semi-fixed. Okay, good. What will you remember tomorrow? That's the question.
Operating income, is it the same as revenue too?
No, revenue would be sales. Operating income is what's left after you subtract your operating expenses from operating revenue.
Okay, I'm trying to remember.
Yeah. And then we have non-operating things too. Like if you sell widgets, remember widgets from your econ class? Widgets, it's an imaginary thing that you sell. When you sell these things, if 90% of your business is selling widgets, that's your operating income. Maybe you have a 10-story building and you only use 9 stories, so you rent out the 10th floor, you get revenue from that, rental income. That rental income is part of the income statement, but it's not part of your normal operations because you're in the business of manufacturing widgets. That would be called non-operating income. So when we're talking about here, net operating income, we're not getting into all that non-operating stuff. So this is a simplified model, only has a few numbers. But the important thing on this slide is that in the contribution format, which is the format we'll be using most of the time, the advantage of the contribution format is it breaks the cost into the fixed and variable components. So that if you want to know your profit margins, your break-even points, things like that, the math has already been pretty much done for you. All you have to do is crunch a few more numbers and you get whatever answer you're looking for. Understanding cost classifications used, and we have differential cost, opportunity cost, and sunk costs. These are 3 different concepts. They're related. They're economic terms as well. Differential cost is the cost of choosing A instead of B. You know, if you can buy one car for $10,000 and another one for $14,000, what's the differential cost? 4,000. The opportunity cost is the cost of doing A instead of B. If you weren't here, you could be out working, making $10, $15, $20 an hour or whatever. So the mere fact that you're here is costing you money. Have you thought about that? Maybe you shouldn't. Maybe some of you won't be here next week. If you say, oh, if I can make $20 an hour by not coming to class, I'll make $20 an hour. That's called an opportunity cost. The cost of choosing option B instead of option A, being here instead of working someplace. And then sunk cost is past cost. You might write that down. Sunk cost equals past cost. Or sunk cost equals irrelevant cost. For purposes of this course, any sunk cost, any past cost is irrelevant for purposes of making certain decisions. You hear Donald Trump last night? No? In his speech, you were busy studying accounting last night, right? Okay, yeah. Well, one thing Donald Trump said is that we've spent 17 years in Afghanistan. We can't abandon it because we've invested all this treasure and blood and stuff. According to this concept of sunk cost, any past cost is irrelevant. So if we stay in Afghanistan, it should be because the benefit exceeds the cost from today on, without regard to what it cost us for the last 17 years. That would be like an example. It's not an accounting example exactly, but any past cost is irrelevant for purposes of determining future action. I'm not saying that those 17 years in Afghanistan we should ignore, because people died, we spent billions and billions of dollars. But when you're trying to determine what to do from today on, all those costs from a strictly economic point of view should be totally disregarded. If we should continue in Afghanistan, if we should spend more money there, does the benefit exceed the cost, or does the cost exceed the benefit? We should forget about the cost in the past, because that should not influence our decision for the future. That's one example from current events. Once in a while, I'll bring in current events. But we'll see how this sunk cost stuff works very soon, actually, because it's on a slide just a few slides from now. Cost classification for decision making. It is important to realize that every decision involves a choice between at least two alternatives. If you don't have any choice, then there's no decision to make. That's actually a deep philosophical question, if you think about it. Yes? Should we get into philosophy here? No? Now, what if you're in the Army during wartime and the commanding officer says, shoot that guy? And if you don't shoot him, I'll shoot you. Do you have a choice? A philosopher would say yes. But yeah, you have a choice. Somebody's going to get shot. You get to decide whether it's you or him. But yeah, a philosopher would say there's a choice. But as a practical matter, there's no choice. So if you really don't have a choice, it's not your fault. Right? No decision to make. In order to have a decision opportunity, you have to have at least two options. Except in philosophy, we're not going to go there. The goal of making decisions is to identify those costs that are either relevant or irrelevant to the decision. They could be relevant for some other reason, but when it comes to making a decision, they may be relevant or irrelevant. To make decisions, it's essential to have a grasp on three concepts. It should be of three concepts shown on the following slides.
I don't get how that picture really fits my phone.
It's an attention-directing thing for guys. And some girls. I don't want to be exclusive here. Yeah, now we're getting into cultural stuff. Yeah, why is the photo there? For those in cyberspace, someone asked, why is that photo there? How does that relate? It's to get your attention, I guess. Maybe the next one will be a guy with a six-pack. Or maybe not. No, probably not. Differential cost and revenue. Cost and revenues that differ among alternatives. Example, you have a job paying $1,500 per month in your hometown. Well, that's not Fayetteville. Everyone makes at least $10,000 a month here. But somewhere, someone's only making $1,500 a month. You have a job offer in a neighboring city that pays $2,000 per month. The commuting cost of the city is $300 per month. Are all of those numbers relevant in terms of making the decision? Should you take the new job? They're all relevant, right? If you use the number in making the decision, it's relevant. If you ignore it, it's irrelevant. The commuting cost of the city is $300. Differential revenue is $2,000 minus $1,500 is $500. Differential cost is $300. So you're $200 ahead by changing jobs. Now, the economist escape clause would be all other things being equal, right? What if you don't like the other city? What if you don't like the hassle? What about the time of driving from one city to the other? That's, maybe you can put a dollar figure on that, maybe not. Maybe you can say, well, the 500 minus 300, I'd be 200 ahead before taxes. That's a cost. And you know, what if it takes me an hour to get there each way? I could be doing something with that 1 hour. I could be sleeping. I could be watching TV. I could be reading the complete works of Socrates. You know that's a joke, right? Yes. Okay. And you know why it's a joke, because I told you last week. Right? Socrates never wrote anything. Okay. So it wouldn't take you long to read his complete works. So those are things we're not going to get into here, but they're things in the real world you would consider. Or if you have the option of taking a train somewhere or driving, you can compare the cost. But there are other factors too, like the hassle of trying to find a parking space in New York City, if that's where you're going. Or the hassle of driving versus the convenience of taking the train and sitting there and sleeping or something. Those are things you can't really put dollar figures on, but they're things that would enter into your decision. The potential benefit that is given up when one alternative is selected over another, that's an opportunity cost. An example, if you were not attending college, you could be earning $15,000 per year. The opportunity cost of attending college for 1 year is $15,000. Of course, if you work full-time and go to school, then you have a different cost structure. Is anyone working? No? No? You're all just going to school, taking my course and my course only? No? Oh, okay. So we all, in this room, we have different opportunity costs. You decided for some reason that you're better off being here rather than anywhere else in the world. Because that's where this is the place to be. And you've decided that with your feet. You voted with your feet to come here. Did I hear a voice? Is that...
Oh, that's me. Martin spoke up.
Okay, go ahead.
I work full time, so yeah, I said it must be nice.
Yeah, I know some people, they just go to school and that's it. Yeah, just go to school, nothing else. You know, parents pick up the tab or something. So I had to work for a living before I became a professor. That's another attempt at humor. You know, if you love what you're doing, it's not work, right? Yeah. Okay. You're yeah, it's nice. Yeah. So I used to work on the back end of a garbage truck. That was fun. Not yeah, there's stories there. Maybe I'll tell you later. Opportunity cost to now here's another one. Why do they have her there? Oh yeah, the cost of the diploma. Apparently she thought that the cost of getting the diploma was less than the benefit to be received. Sunk costs or past costs. They've already been incurred, cannot be changed now or in the future. These costs should be ignored when making decisions. An example, suppose you had purchased gold for $2,200 an ounce, but now it is selling for $1,000 an ounce. Should you wait for the gold to reach $1,200 an ounce before selling it? I don't know why they have that number. You may say, yes, even though 1,000 purchase is a sunk cost. It's not the greatest example, I guess. But any cost in the past is an irrelevant cost for purposes of determining what you should do. Now, like if you buy a share of stock or something, the price goes down. Should you wait until it goes up to sell? Well, what if you need to sell your investment portfolio to buy a house or an apartment building or something? Then you sell. It has no relationship to what it costs if you'd be losing money or gaining money. Yeah, what if you have a choice? You have two different stock and bond portfolios. If you sold one of them, you take a loss, and the other one you sell it at a gain, and you need the money because you want to buy an apartment building. Which one do you sell? The one that you'd sell at a gain or the one that you'd sell at a loss? If you sell it at a gain, you'd be taxed. If you sell the one where you lose money, you get a tax deduction. Ah, okay.
But how much is the gain and how much is the tax?
Well, yeah, how much is the gain, how much is loss? If you have tax loss carry forwards, you might sell the one at the gain because the loss from prior years would absorb the gain. And if you don't know what I'm talking about, that's okay. But, yeah, and if you have gain from, if you would sell something else at a gain, you could sell one thing at a loss, and the loss would absorb part of the gain from something else. Oh, okay. It's Langley calling again? Oh, for a joke. Okay. Yeah, it's a full CIA joke. So, you got it? Okay, good. Yeah, in my novels, by the way, not to have a cheap little marketing shot here, in my novels, Langley is mentioned in connection with the CIA from time to time. So be sure to buy them. They're on Amazon.com for practically nothing. Yeah, like you don't have enough to read already, right? So yeah, one of them, Justifiable Homicide, is about killing politicians who need to be killed. I don't know who those are, but 129,000 words. So if you have nothing to do some night,
You wrote that?
yeah.
Like within the last 9 months?
No, 2014. And some of the politicians in there resemble some people who are still in office. And some are a composite. I started writing it when I lived in Miami. And just about all of my students were some kind of Hispanic, about 50% Cuban, the other 50% were like Venezuelans and Colombians and stuff. So what I did was I went through my roster and I picked the first name of one student and the last name of another student. I put them together, and that's how I got the characters for the novel. There were a few non-Hispanics in there too, but how many have been to Miami? There's a few non-Hispanics there. Yeah, it's the financial capital of Latin America, pretty much. But they're not all Cuban anymore because there's so much immigration from everywhere else. And there's a little Haiti, we have a Haitian part of town there. If you want, really good Haitian food, you can get it there. But anyway, that's where I got the characters for the novel, by taking the first name of some students, last name of other students, putting them together. Justifiable Homicide. And
How much is it?
the ebook I think is $3.99. The paperback is like 16 something. Yeah, for 129,000 words of really top-notch stuff. Well, I don't know about that much. It was on the Amazon bestseller list for a while. So, and if you want something that's shorter to read, I suggest Annie and the Senator. Annie and the Senator. That's a shorter read. That's ebook only. I think that's maybe 30,000 words, something like that. So it's about someone. This is turning into an advertising campaign, I guess, right? Yeah, Annie is half Chinese, half Thai. She grew up in the streets of Bangkok and rose to a position of authority. Became the president of one of the largest banks in Miami. Passed the CPA exam, obviously, and why not, right? And she had this really good career going until some senator found out about her shady past, and he wanted to shake her down for money, or else expose her, and she didn't want that, so she didn't know what to do about it. Then she thought of something she could do, and she sort of did it. Well, I don't want to spoil, but she had this thought process that she went through, and she might have had to kill some other people along the way. I'm not saying. The technique she used was rather interesting as well. Now you want to buy this instead of reading accounting, right? Okay, totally up to you. No calculator required for this one. There's no regression analysis, although there is some regression because she thought about her youth when she first became acquainted with this particular killing technique. Bless you. Somebody's allergic to my marketing. Okay. Yeah. I have a few other novels on there too, short ones, and some others in process. Which brings us to the quick check, 1 of 6. That's my attempt at a segue. Suppose you were trying to decide whether to drive or take the train from Portland to attend a concert. You have ample cash to do either, but you don't want to waste money needlessly. Is the cost of the train ticket relevant in this decision? In other words, should the cost of the train ticket affect the decision of whether you drive or take the train to Portland? Yeah, that's relevant. We would call this differential analysis because the numbers are different. The cost of driving versus the cost of taking the train. Differential analysis. Fancy word. Yes, the cost of the train ticket is relevant. Again, when you're making decisions like this, you only look at the relevant items. If the cost of taking the train and the cost of driving are exactly the same, that would be irrelevant unless you preferred one over the other for some non-monetary reason. Suppose you're trying to decide whether to drive or take the train to Portland or attend a concert. You have ample cash, blah, blah, blah. Is the annual cost of licensing your car relevant in this decision? No. You're going to license it regardless of whether you drive this time or not. It's the same regardless of choice A or choice B. Therefore, it's not relevant. The licensing cost is not relevant when it comes to making this decision about how to get to Portland. Suppose that your car could be sold now for $5,000. Is this a sunk cost? What's the definition of a sunk cost? A past cost. Is that a past cost?
No.
5,000 is what you can sell it for. It's not a cost at all, right? It's revenue. Oh, yeah, if you want to put it that way. We do want to put it that way. No, it's not a sunk cost because it's not a cost. The 5,000 is revenue. If they asked, or if they said the cost originally cost $8,000, now you can sell it for 5,000. Would the 8,000 be relevant?
Yeah.
No.
Because it's paid.
It's a past cost. Yeah. You can get 5,000 for it. Should you sell it for 5,000? Which do you value more, the car or 5,000 in cash? The fact that you paid 8,000 for it is irrelevant when it comes to making that decision. Now, there's this little thing in your mind that might say, I don't want to sell it at a loss. Yeah, but
Well, hold on. My thing is, how long ago was it? That's what I'm trying to get. You bought it $8,000, how long ago? Can you consider that too?
well, let's say you bought it brand new this morning for 8,000. You drove it off the lot. Now it's a used car. Now it's worth 5,000. That would hurt, wouldn't it?
That's what I'm saying.
Yeah, yeah. There's a psychological thing there that says, no, I have to get my money out of this.
Yeah, I bought it, I lost my job, I got to sell it, I mean, 5,000.
Yeah, yeah. If you need the 5,000, you're going to sell it, and the fact that it cost you $8,000 yesterday is irrelevant for purposes of determining what do I want. Do I want the car? Do I want the 5,000? The fact that it might have cost 8,000 yesterday is irrelevant for purposes of determining whether you should sell it. I mean, sure, it hurts. You know, you drove it off the lot, you just lost $3,000. It hurts. But as far as deciding should I sell or not, would I rather have the 5,000 or would I rather have the car? The fact that it cost 8,000, if you're thinking like an economist without emotion, then it's not a sunk cost. It's not a cost at all. It's revenue, actually. So, again, coming back to that Afghanistan thing, you know, should we abandon Afghanistan? We invested 17 years there, billions of dollars and thousands of lives. Well, those are all past costs. You know, when we ask the question, should we stay there? We need to ask, is it in America's best benefit to keep going or not? And then there's that whole other thing. Should we do things that are not in America's best benefit just because it's in the benefit of somebody else? That's a whole nother question, right? Yeah, is saving Afghanistan worth 5,000 American lives? Well, it depends on whose lives, right? If there are people you don't like anyway, if you had 5,000 enemies and you can send them all to Afghanistan, I mean, this is the kind of approach an economist would use to analyze the question. But I mean, basically, when you're looking at this, a sunk cost is a past cost. You only look forward. What's the benefit of doing this versus the cost going forward? The fact that we spent 17 years in Afghanistan, you know, thousands of lives, billions and billions of dollars, for purposes of determining what should we do now, if you forget about the fact that it might be an embarrassment to say, you know, we lost another one. You know, that's a thing too. In Asia, in some parts of the world, they have this thing called saving face. Have you heard about that? Yeah, you can't do things that cause you to lose face. I recall reading about this one case in Thailand. There was this police officer, he arrested somebody, the guy got convicted, the guy spent like 10 years in prison. After he was in prison for a few months, the policeman who arrested him found out the guy was really innocent. But because he didn't want to lose face, he didn't tell anybody. He found new evidence. So the guy spent 10 years in jail because the Thai policeman didn't want to say, oh, I made a mistake. There'd be loss of face. So when we talk about things like that, other things like, we can't leave now because we've invested all this. Those are past investments. When we're trying to determine whether we should go forward and either go in there big time or get out or something in between, we should ignore all that past cost stuff. I mean, it's easier said than done because there's emotions involved. But an economist would look at it coldly, a good economist would, and say the cost exceeds the benefit. Or maybe the benefit exceeds the cost. Make the decision based on that. Sunk costs or past costs, all past costs are irrelevant for purposes of management accounting if we exclude emotion and face saving and nationalism and all that stuff. Those are big ifs, aren't they? Yeah. Well, the nice thing in accounting, the choices will be easy. You just have to ask yourself, is it a past cost? If the answer is yes, ignore it for purposes of deciding what to do next. So I'm throwing some, current events, history, philosophy, political science, all that in there, just to make it interdisciplinary, and because I heard the Trump speech yesterday and he made a mistake when it came to sunk costs. Unless you put emotion into it. If you analyze it from the perspective of cold, hard economics, that's different. So now you have to ask yourself the question, should I think like an economist or should I think like a real living human being? Yeah, up to you. Summary of the types of cost classifications. Again, financial reporting, that's for external users, predicting cost behavior. You have fixed, variable, mixed, and so forth, assigning cost to cost objects, how you allocate costs, and making business decisions based on the numbers you have. Okay, that's it. We have about a little less than an hour, maybe 45 minutes to crunch as many numbers as possible. Are we ready? Sure. You're more than chomping at the bit for this one, right? Yeah. Let's take a look at the first homework exercise on page 49.
I have a question about how they're labeled on the book.
Okay.
It says on a syllabus, it says E.
2-1.
No, it just says E. It says E2. And then it says 1, 2, 3, 4, 5, 6, 7.
Oh, okay. Yeah.
So does that mean 2 dash?
Yeah, for those in.
Stab, I guess, at which one does it know?
Yeah, okay, I'll explain it to those in cyberspace as well, yeah. The question has been asked about on the syllabus. I'm looking at week 2, 8/23, the homework assignment. E2 means the exercises from chapter 2. Then the exercises I want you to do are exercises 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and so forth. So E2 means the exercises from chapter 2, and then anything after the colon, those 2 dots, those are the particular exercises. Like E2-1 would be on page 49. E2-2 would be on page 50.
So is that the first E2, the 1 through 10, and then 13 through 15? Is that for 2-1 or 2-2?
That's for the E2 is chapter 2 exercise, and then those other numbers are the particular.
But there's several other sets of 1 through 15 in these scenarios, So like I just did the first one, but if you can keep going through, like the very next page has 1 through 15 on chapter 50 or page 50.
Oh, I see. Yeah.
It's confusing.
Yeah. At the bottom of page 50, there's a thing there with 15 parts. That's exercise 2-3, which is E2-3.
Okay, so the 1 is actually the E2, the 1 is in.
Yeah. E2:1 is the exercise on page 49. 49? 49. Well, 49 in my book. Oh, I see. Yeah, for those who are looking at page 47, those are questions instead of exercises. I can see where it's getting confusing. Yeah. Yeah, what I'm looking at is page 49. That's the exercise I want you to do. At the bottom of 49,
Okay,
exercise 2-1 here, but in the syllabus, it's 2:1, 2, 3, 4, and so forth.
so we should just know that colon is part of that and 2-1.
Well, the colon separates the chapter from the exercise.
What, I know what I'm saying is like, if you're saying, so problems 1 through 10 at the end of chapter 2, where there's
Yeah.
multiple sets of 1 through 10. back there.
Right. Yeah, you do the whole thing. Yeah, like if exercise 5 might have 3 parts, you do all 3 parts of exercise, whatever it is.
So there's one called questions and one called exercises.
Yeah,
You're referring to exercises.
exercises, yeah. Yeah, the homework assignments are only exercises and problems. There are other things in there like questions, and like on page 47, those are questions. You do have the answers to those on Canvas as well. 'Cause I gave you
But
other
those
stuff.
aren't the ones you want us to do. Those aren't what you're referring to at the end of your syllabus.
Yeah,
You're
right.
referring to exercises.
Yeah, the homework exercises in this chapter start on page 49. You can do all the other stuff plus more. I don't want to discourage you from doing that. But the ones I'm going to go over in class start on page 49 for this
So 1
chapter.
through 10 are all on page 49?
No,
No,
one is on page 49 and 2 is on,
Oh, 'cause in
2
the-
and 3
in the
on page
answers you
15.
put online, that was like a conglomerate of like 4 hours of homework just for that. Because the time was at the top,
Oh, yeah. Yeah, the authors give you suggested times, which
which we're slower.
students are saying, I can't complete it in that time. Where did they get these numbers from? Well, if you pass the CPA exam, you can do them in the amount of time they give you. No. And again, if you have time, I've given you. Right? No, I'm not on the CPA committee. But once upon a time, I used to, when I lived in New Jersey and worked in Manhattan, I used to go to AICPA where they make the exam. And they would pay academics a certain number of dollars per hour to come up with multiple choice questions and other questions. I used to do that a little. And then I worked for a CPA review course, subsidiary of Harcourt Brace. It's called Miller CPA Review. They've since merged and stuff. But I used to write CPA review materials. I used to teach CPA review courses. Used to fly around the country opening up new CPA review locations. So I really love all aspects of the CPA exam. But I can't really teach that here because nobody likes CPA. You do, right?
I'm still confused about the word.
Oh, okay. Yeah. I'm doing a sort of superficial approach. But once in a while, I dig into depth a little bit if I think it would be worthwhile. Again, it's a cost-benefit thing because I'm working with time constraints. That's why I don't give you more homework. You have enough.
Yeah.
You know, if you did and understood all the homework I gave you, you're going to get an A for the course. You know, you don't have to do everything. So let's dig out those. What am I doing here? It's, this is this one, right? And these are the answers to the questions that are like on page 47, I think, thereabouts. And then the foundational, these foundational things are good too. I don't assign these necessarily, but it's additional learning opportunities. This one is a really good one if you look at what's going on there. Yeah, this is a really good book. It's one of the best ones on the market, maybe the best. Okay, so here's the answer to exercise 2.1. This is at the bottom of page 49, identifying direct and indirect costs. Remember, we have two kinds of direct manufacturing costs, direct material and direct labor. It's direct if you can trace them directly to a product without too much hassle, if it's easy to do and cost effective. Indirect manufacturing costs would be anything else, any other kind of manufacturing cost that's not direct. So Northwest Hospital, looking at the bottom of page 49, Northwest Hospital is a full-service hospital that provides everything from major surgery and emergency room care to outpatient clinics. So the requirement For each cost incurred at Northwest Hospital, indicate whether it would most likely be a direct cost or an indirect cost of the specified cost object by placing an X in the appropriate column. Now, some of these could be up for debate. So if you think the author's answer is wrong, we can talk about it. Maybe I can give you an example to clarify it. Or maybe I'd say, oh yeah, I agree, the author's wrong on that. That doesn't happen too often. The authors are usually right. Yes?
7.
You want me to skip the first 6 and go on to 7?
No, you said some maybe up for debate. So 7, the lab test by the outside contractor.
Okay. For a particular patient. Yeah, for number 7, here at the top of page 50, number 7, lab tests by outside contractor to a particular patient. That's easily traceable.
Yeah, that's not right.
And so that would be direct because it's easily traceable. 8th. Okay. Lab test by outside contractor to a particular department. That's traceable to a department. Now here's another thing. Sometimes the cost could be direct for one purpose, but indirect for another. If it's traceable to a department, it's a direct cost as far as the department's concerned, but it would be an indirect cost as far as a particular patient is concerned. The same exact cost, but it could be direct for one purpose, like to a department, but it could be indirect because maybe you can't trace it to a particular customer. If you can, then it's direct as far as the customer is concerned as well. That's why it gets maybe a little confusing. Let's start with the first one. Well, they give you an example. Catered food service to patients. To a particular patient, you can trace it to the person who ate it, so that's direct. Number 1, the wages of pediatric nurses to the pediatric department. Those costs are traceable to a department, but it wouldn't be traceable to a particular individual. So it's direct as far as the department goes, but to a particular patient, it might be indirect. Prescription drugs to a particular patient, if you can trace it to a particular patient, it's direct. Number 3, heating the hospital. Yeah, the pediatric department, that's, you can allocate it, but you can't really trace it. So that's indirect. And number 4, the salary of the head of pediatrics to the pediatric department, that's directly traceable. And number 5, the salary of the head of pediatrics to a particular pediatric patient, that's indirect. Yeah, you can allocate, but you can't trace directly. Number 6, hospital chaplain's salary to a particular patient, that's indirect. The chaplain does things for a number of patients. Number 7, lab test by outside contractor to a particular patient. If you can trace it to a particular patient, it's direct. Lab test by an outside contractor to a particular department, it's direct to the department. Any questions about any of those? Again, all these answers are available on Canvas, so you can refer to them. And feel free to take notes too, but you don't have to copy everything because this stuff is also available on Canvas. Number 2, classifying manufacturing costs. Again, we have direct material and direct labor and manufacturing overhead. The PC Works assembles custom computers from components supplied by various manufacturers. The company is very small, and its assembly shop and retail sales store are housed in a single facility in a Redmond, Washington industrial park. What company is located in Redmond, Washington? Does anyone know? Maybe begin with M. Microsoft, yeah. That's worldwide headquarters of Microsoft. Redmond, Washington. It's a suburb of a larger city. What's the larger city? Begins with S. Seattle, right? Seattle, Washington, yeah. Listed below are some of the costs that are incurred at the company. So the requirement for each cost indicate whether it would most likely be classified as direct labor, direct materials, manufacturing overhead, selling, or an administrative cost. So we have 5 options. First one, the cost of a hard drive installed in a computer. That'd be a direct material cost. Would that also be fixed or variable? Let's say you manufacture computers. Yeah, it'd be variable. The more you manufacture, the higher the cost. But they don't ask that here. They just ask for the other things. I'm just trying to soup it up a bit. Number 2, the cost of advertising in a Puget Sound computer user newspaper. What kind of cost would that be? Selling. That's a selling. Are selling costs product cost or period costs? DSP.
When it's sold,
Yeah, it's a period cost, right? Because the only product costs are manufacturing costs. And this is not a manufacturing cost. See, now you've had time to forget. And so now I'm bringing it back to the surface now. If I do this often enough, you know. Number 3, the wages of employees who assemble computers from components.
direct.
Yeah, direct labor, right? And number 4, sales commissions paid to the company's salespeople. Selling. And the wages of the assembly shop supervisor. Manufacturing overhead. And number 6, the wages of the company's accountant. Administrative. Is that a period cost or a product cost? Period cost. You deduct it at the end of the period. How many kinds of product costs do we have? 1. And what is that? Manufacturing cost, right? Cost of goods sold. Yeah. Good. Number 7, depreciation on equipment used to test assembled computers before release to customers. That's manufacturing overhead. Number 8, rent on the facility in the industrial park. Well, the manufacturing part of it would be manufacturing overhead. But let's say you have one facility, you manufacture stuff, you have a sales office and you have administrative offices. You would allocate that 3 ways, right? The part for the manufacturing facility would be manufacturing overhead. The part for the sales office would be selling. The administrative part for like the accountant's offices and stuff would be administrative. You might allocate it on the basis of square feet or something.
So how do we answer that one for this purpose?
Well, you do all 3. Manufacturing overhead, selling, and administrative.
Okay.
Yeah. Yeah. Any other questions on number 2? Huh? Everybody having a good time, or is it just me? Just me? More jokes. That's what we need, more jokes. Oh, this looks like a good one. Number 3, classification of costs as product or period cost. Again, the only product cost we have is cost of goods sold. She's fast. Yeah, yeah. Yeah, the only product cost we have is cost of goods sold and the components thereof, which are direct material, direct labor, and manufacturing overhead. Those become the inventory becomes cost of goods sold. That's the only product cost we have. The other costs are all period costs. 2 kinds of period costs in Chapter 2, selling and administrative.
I feel like it's harder to remember all the components of product costs, so just by process of elimination, if you know the very small period costs.
Yeah, if it's not selling or administrative, it's product cost. Yeah, that's the easy way to do it, right? If there's the easy way and the difficult way and you get the answer either way, which way should you do it? Well, the easy way, I guess. Occam, have you ever heard of him? O-C-C-A-M. There's this philosopher who came up with that theory. Well, he didn't come up with it, he just elaborated on it. He says if there's 2 ways to do something and one way is easier than the other, do it the easy way. And the term for that in philosophy is called Occam's razor. O-C-C-A-M'-S, razor. R-A-Z-O-R, like you shave with and stuff. Yeah, what you do is you take a razor blade, you slice out the unnecessary part and throw it away. You slice out the unnecessary stuff. And that's Occam's razor. Do it the easy way if you get the same result and you have more than one way to do it. Wow, this is really interdisciplinary tonight, isn't it?
Yes.
Medieval philosophy.
Political.
Yeah, political. Current events, microeconomics, all that stuff. Okay, so exercise 3. Suppose that you have been given a summer job as an intern at Isaac Aircams, a company that manufactures sophisticated spy cameras for remote-controlled military reconnaissance aircraft. The company, which is privately owned, has approached a bank for a loan to help it finance its growth. The bank requires financial statements before approving such a loan. You have been asked to help prepare the financial statements and were given the following list of costs. Rather than read through all those 15, let's go to the top of page 51 to see what they're looking for. The requirement is classify the above cost as either product cost or period cost for the purpose of preparing the financial statements for the bank. So it's a period cost if it's either selling or administrative. Otherwise, it looks like it's a product cost. Let's say throw us a curveball and it's something that's not a cost at all, maybe. But let's take a look. Number one, depreciation on salesperson's cars. Period cost because it's selling expense. Number two, rent on equipment used in the factory. Product cost because it's a manufacturing cost. Number three, lubricants used for machine maintenance. Product cost because it's a manufacturing cost. Number four, salaries of personnel who work in the finished goods warehouse. Period cost. Number five, soap and paper towels used by factory workers at the end of a shift. Product cost because it's a factory cost. That would be an indirect cost, but it's a factory cost. Number six, factory supervisors' salaries. Product cost because it's a manufacturing cost. Number seven, heat, water, and power consumed in the factory. Product cost, well, it's a manufacturing cost, right? All manufacturing costs are product costs. For now. Just when you thought you had a handle on it. For now. Yeah, we won't go there now, but in like 8 or 10 chapters, we'll discuss this again. Number 8, materials used for boxing products for shipment overseas. Units are not normally boxed. Period cost. Yeah. Advertising costs. Yeah, that's a selling expense. That would be a period cost, meaning you deduct it at the end of the period. Number 10, workers' compensation insurance for factory employees. Product cost because it's a factory cost, manufacturing. Number 11, depreciation on chairs and tables in the factory lunchroom. Product cost because it's a manufacturing expense. Number 12, the wages of the receptionist in the administrative offices. That's a period cost because it's administrative. 13, cost of leasing the corporate jet used by the company's executives. Period cost. That would be probably administrative, unless they use it for selling sometimes. But either way, it's a period cost deducted at the end of the period. Yes. Number 14, the cost of renting rooms at a Florida resort for the annual sales conference. It's a selling expense, period cost. Number 15, the cost of packaging the company's product. Product cost. Okay. Man, if I gave you those on the exam, everybody'd get them all right, probably. I'm hoping. Any questions? Is there anything there that's questionable? I mean, we've given the obvious answer, but maybe some weren't so obvious. Questions?
The lubricant one was questionable, because I believe you went over some of the slides that said it was
Which one was that? Which number?
number 3.
Number 3. Lubricants used for machine maintenance. Yeah, if it's for machine maintenance, that would be a machine presumably used.
I thought it contradicted. You got the slides online, right?
Yes.
Okay. Yeah.
It's indirect, but still.
Yeah, it's indirect because the cost of tracing it exceeds the benefit, but it's part of a product, and so it's a product cost. Yeah. Let's take a look at number 4. Oh, look at this one. Another good one. 15 minutes. We can do it in much less than that. Espresso Express operates a number of espresso coffee stands in busy suburban malls. The fixed weekly expense of a coffee stand is $1,200, and the variable cost per cup of coffee served is 22 cents. Well, you can see where this is going, right? Is this a y equals a plus bx situation? Could be. Requirement, fill in the following table with your estimates of total cost and cost per cup of coffee at the indicated level of activity for a coffee stand. round off the cost of a cup of coffee to the nearest tenth of a cent. So let's take a look at the options. We have a volume here of 2,000 cups, 2,100 cups, or 2,200 cups. The fixed cost is always 1,200. Regardless of level of activity, it's 1,200 because it's a fixed cost. The variable cost, where's that 440 come from? Yeah, 22 cents times 2,000, right? 22 cents a cup times 2,000 is 440. 22 cents times 2,100 is 462. 22 cents times 2,200 is 484. So that's where those variable costs come from. 22 cents times whatever this number is, 2,000, 2,100, 2,200. And then the total, yes, I can. Some things I can do. This is one of the things I can do. I'll make this larger. That's much better. Huh? Yeah. Yeah, sometimes it's a good thing to ask because there are things I can do if you ask. So again, the 440, it costs 22 cents for one cup. 22 cents times 2,000 is 440. 22 cents times 2,100 is 462. 22 cents times 2,200 is 484. So again, this is just in charge form. It's y equals a plus bx, basically. Total cost equals fixed plus variable. And the total cost, you just add them up, 1640, 1662, and so forth. Now, for the next one, the cost per cup. Where does that 82 cents come from? Total cost, 1640 divided by 2,000 total units. 1640 divided by 2,000 is 82 cents. 1662 divided by 2,100 is 79.1 cents. 1684 divided by 2,200 is 0.765. So you notice the cost per cup declines as you expand the level of activity. Why is that? It's because you're spreading your fixed cost over more units. Yes? Yes, you're spreading your fixed cost over more units. What's the fixed cost per unit at this level? 1,200 divided by 2,000 is, what, 60 cents? Something like that. We shouldn't even go there, though, right? I already warned you about that. Bad number. Fixed cost per unit, there's nothing good can come from that number because you can use it to make bad decisions. I just asked that in the interest of completeness. And also to reiterate the fact that you should never do that. Questions? Well, that's for part one anyway. What's part two? Does the average cost of cup served increase, decrease? Okay, we already answered that. Yeah, it goes down because you're spreading the fixed cost over more units. And in microeconomics, they would call that economies of scale, right? You spread the cost over more units, you can lower your total unit cost, or your unit cost, I should say, because you can spread it over more units. Reminds me of the first night I spent in New Jersey. I didn't always live in New Jersey. I lived other places. And the night I moved to New Jersey, the kids were small. We had one of these rent-a-truck things where I moved all my earthly possessions in one truck. And we'd already rented an apartment, but we got there too late. The landlord had gone home and we couldn't get the key. So the first night in New Jersey, we had to stay in a motel. It was on like Boulevard East, close to Manhattan. So we pulled in, and I said, "Do you have a room to rent?" And he said, "Do you want it for all night?" And I said, "Yeah." And he said, "Well, I don't have one now." Then he looked at his watch and he said, "I'll have one in about 15 minutes." How does that relate to chapter? How does that relate to chapter 2? He's spreading the cost over. If you can rent the same room 4 times a night, you can spread the fixed cost of that motel over more units, right? So what he was doing was spreading his fixed cost by renting out the room 3 or 4 times a night. Now, what would the variable cost be in that case, or shouldn't we go there? No, we don't need to go there. But again, it's a real life example where you're spreading the fixed cost over more units. If you have an occupancy rate of more than 100%, means you're renting the room more than once a night. And if you have to pay either for to pay off the mortgage, or if you're renting the place, whatever the rent is, can spread that out over more units. You can charge a lower price and still make a profit because you're spreading the cost over more units. Okay, well, let's go on to number 5. The high-low method. You already know how that works, right? Take the high number, you take the low number, you figure out the variable cost, you figure out the fixed cost, and usually the total cost is already given. So for number 5, in page 51, the high-low method. The Cheyenne Hotel in Big Sky, Montana has accumulated records of the total electrical cost of the hotel and the number of occupancy days over the last year. An occupancy day represents a room rented out for 1 day. The hotel's business is highly seasonal, with peaks occurring during the ski season and in the summer. So there they have 12 months worth of data, January to December, and which month has the highest number of occupancy days? August, right? 2,406. And which month has the lowest number of occupancy days? October, 124. So we take the 2406, and the cost there is 5,148. And for October, 124 occupancy days, the cost 1,588. Those are the only numbers we have to deal with when we're trying to figure out fixed and variable cost, total cost at any level of activity within the relevant range. We can ignore all that other stuff. If we wanted to include all of these numbers, not just 2 months, what method would we use instead of the high-low method? The regression, right? The least squares thing. Yeah. Because then you have to plug in everything, push a few buttons, and it all comes out because the formula is already programmed. So the first requirement, using the high-low method, estimate the fixed cost of electricity per month and the variable cost of electricity per occupancy day. Round off the fixed cost to the nearest whole dollar and the variable cost to the nearest whole cent. So for the high-low method, you notice how they do it. They have a column for occupancy days. They have one for electrical costs. The high level of activity is August 2,406. The low level is 124. The difference, or the change between the two, 2,282. And the dollars, the high cost, 5,148. The low cost, 1,588. The difference, 3,560. So if you want the cost per unit, you divide dollars by units, cost per unit, and 3,560 divided by 2,282 gives you $1.56 per day. That would be the variable cost. So if you're thinking of y equals a plus bx, b is $1.56. And the x could be whatever the volume is. A, we don't know yet. We're trying to figure out the fixed cost, that's A. And then y is just the total, fixed and variable. So if the total cost for August, you can choose August or you can choose October, it doesn't matter. You get the same number. The fixed cost should be $13.95. The authors here have chosen August. So your total cost minus variable equals fixed. You know, total cost equals fixed plus variable. So if you don't know the fixed, but you know the total and you know the variable, you can find the fixed. If you have any 2 out of 3, you can find the other one. So you take total minus variable. Variable is $1.56 per day times the number of occupancy days, 2,406. Whatever is left is the fixed element. If you wanted to take October, instead of the 5,148, you would take the 2,406. And instead of the 2,406 here, again, you take the 124 times 156, whatever you get, you still get $13.95. That's a way to check your work, too. If you do the high and the low and you get the same amount, you probably did it right. If you get 2 different numbers, you made a mistake somewhere. It's a good way to check your work if you don't have time constraints. So that's it for part 1. Any questions on part 1?
Question.
Yes?
If you do the low and the low occupancy, right?
Mhm.
Do you use the same 156?
Yes. Well, or the low would be like the 124. Yeah, you'd still use 156. Yeah. The question is for those in cyberspace, if you used October instead of August, would you still use the $1.56 per occupancy day? The answer is yes. Okay. What does it ask for part 2? What other factors other than occupancy days are likely to affect the variation in electrical costs from month to month? This complicates things because you're introducing additional factors. Let's see what the authors come up with. Electrical costs may reflect seasonal factors other than just the variation on occupancy days. For example, common areas such as a reception area must be lighted for longer periods during the winter than in the summer, so that would change the cost structure a little bit. This will result in seasonal fluctuations in the fixed electrical costs. And additionally, fixed costs will be affected by the number of days in a month. The days that have 20, or the months that have 28 days would be a little different than the ones that have 30 or 31. And costs like the cost of lighting common areas variable with respect to the number of days of the month, but are fixed with respect to how many rooms are occupied during the month. And other less systematic factors may also affect electrical costs, such as the frugality of individual guests. Some guests leave the lights on when they leave the room and others don't, things like that. Some turn on 4 lights instead of 1. Those are all factors too. So you have to average all of that in. Questions, comments? No? Okay. Number 6, traditional and contribution format income statements. What's the main difference between those two?
Inside, outside.
Yeah, inside, outside, external, internal. Yeah, the kind you learned in financial accounting is external users, called the traditional approach. Revenue minus expense equals operating income, basically. The contribution approach, it's revenue minus variable cost equals contribution margin minus fixed cost equals whatever it equals. Hopefully something positive. So in the traditional income statement, here, well, maybe we should read the question. Cherokee Inc. is a merchandiser that provides the following information. So they have the number of units sold, selling price per unit, variable selling price per unit, and variable administrative expense per unit. Then the total fixed selling expense, total fixed manufacturing, or administrative, merchandising, and so forth. They have beginning inventory, ending inventory, and merchandise purchases. Now, what are you going to do with those last 3 bits of information? The beginning inventory, the ending inventory, and merchandise purchases, what do you do with that?
Cost of goods sold.
Yeah, right, that's cost of goods sold. I'm hearing voices in cyberspace. That's cost of goods sold. Because cost of goods sold is just beginning inventory plus purchases minus ending inventory. And in the traditional income statement, we need that information. So here's for part 1, traditional income statement. The sales, $30 per unit times 20,000 units. Cost of goods sold, beginning inventory plus purchases minus ending inventory is cost of goods sold. We subtract that. Whatever's left is gross profit or gross margin. And then we're selling and administrative. Some companies combine those two and some don't. If you have them separately, though, there's a rule that goes back to 1950s or 60s or something. It says if you split out selling and administrative separately, you have to list selling first. What's the reason for that rule?
It's not even alphabetic.
Yeah, it's not alphabetic. S comes before A. But yet selling should be listed first, administrative second, if you list them separately. You don't have to. You can combine the two.
I think you should have to be selling first.
Good guess. But the real reason is to increase homogeneity. What?
Almost together, with the same.
Yeah, almost are together. Homogeneity is a fancy word that means if, let's say you're a financial analyst, you're analyzing 20 different companies in the same industry.
Oh, I got it.
Yeah, if everything is in the same place, it makes your job easier. If everybody lists selling expense first, administrative second, it makes your life easier. It makes for more sameness, homogeneity. Homogeneity.
What was the name for the non-straight thing?
Heterogeneity. What?
What was the name for that non-straight line?
Oh, the non-straight was curvilinear.
It's a curvilinear.
Curvilinear. Yeah, yeah. If you combine homogeneity and curvilinearity, 7 syllables, then you really have, you can charge high rates to your clients. they'll be baffled, you know. And if they're baffled, you can get away with higher rates because they think you know what you're talking about. May or may not be true, but that's a marketing thing when you get a CPA firm. So where was I going?
Selling.
Oh, selling, yeah. So anyway, selling, two kinds of selling, expenses, variable and fixed. Variable, $4 a unit times 20,000, fixed 40,000. All that information is given to you. Administrative, again, variable, $2 times 20,000, fixed 30,000. You combine all of that, you subtract them because they're costs, expenses. What you have left, net operating income. What do you think the net operating income is going to be if you use a contribution approach? The same? Everybody agree? I'd be very upset if it wasn't the same. Is it always going to be the same?
Just rearrangement.
Yeah, you just rearrange it. Because they gave us information about what's fixed and what's variable, we can make a contribution statement. So it's off the same line as before, sales, but now we have the variable cost components. Again, the cost of goods sold, that's the product cost. Selling expenses, the variable portion only, and the variable portion of administrative. Whatever's left is something called contribution margin. If your fixed costs are less than 320,000, you're making money. This is called a contribution margin because these revenues contribute toward meeting the fixed cost. And then the two kinds of fixed expenses, selling and administrative, net operating income, 250,000. So that's what a contribution statement looks like. For management accounting purposes, it's more useful than the traditional approach because it breaks things down into the fixed and variable components so that you can project for any level of activity within the relevant range what your bottom line is going to be because you know the fixed and the variable. That's the advantage of the contribution approach. Questions? Huh? Okay. Then 7, differential opportunity and sunk cost. This is another good one. I try to pick good ones when possible, but sometimes I have to pick ones that you need, not the ones that are fun to do. But this one is both necessary and fun. Well, maybe, we'll see. Number 7, Northwest Hospital is a full-service hospital that provides everything from major surgery and emergency room care to outpatient clinics. The hospital's radiology department is considering replacing an old, inefficient X-ray machine with a state-of-the-art digital X-ray machine. The new machine would provide higher quality X-rays in less time and at a lower cost per X-ray. It would also require less power and would use a color laser printer to produce easily readable X-ray images. So the cost would decrease and the quality would increase. Of course, we can't measure quality, so we'll just deal with the costs. Instead of investing the funds in the new X-ray machine, the laboratory department is lobbying the hospital's management to buy a new DNA analyzer. So the requirement for each of the items below indicate by placing an X in the appropriate column whether it should be considered differential cost, an opportunity cost, or a sunk cost in the decision to replace the old X-ray machine with a new machine. If none of the categories apply for a particular item, leave all columns blank. So the first one, they give you an example, the cost of the X-ray film used in the old machine. Well, that would be a differential cost because it's different than what it would be in the new machine. You know, it's a differential cost if the costs differ between alternatives. That's why they call it a differential cost. And number 1, let's see, the cost of the old X-ray machine. Well, in one case you're buying it, in another case you're not, so it's not differential because you're doing different things. Opportunity cost, it's not opportunity cost. A sunk cost is a past cost, the cost of the old machine. But when you're comparing it to other alternatives, you can totally ignore that too. I mean, what are we trying to do when we're making this decision? We're trying to figure out which one's going to be more cost effective, right? Yeah, and so a sunk cost in that case is irrelevant. But that one is not even a sunk cost. And number 2, the salary of the head of the radiology department. Is that a differential cost? It's going to be the same regardless of alternative. So it's not differential. That's not opportunity cost. Because an opportunity cost is the cost of doing B instead of A, or A instead of B or something. It's not a sunk cost, it's an irrelevant cost. Number for this purpose anyway. Number 3, the salary of the head of the pediatrics department. It's going to be the same regardless of which choice you make. So that's not differential, and it's not an opportunity cost, and it's not a sunk cost. It's just a cost. Number 4, cost of the new color laser printer. Well, that's differential. Because if you buy it, or if you don't buy it, that's different. Differential cost. Was somebody going to say opportunity cost there? I heard that. Yeah. Well, this is one of those tricky ones because, you know, an opportunity cost is the cost of choice B instead of choice A kind of thing. But here you're dealing with 2 different products, not going to Portland versus by train versus car. Part 5, rent on the space occupied by radiology. The rent's going to be the same regardless of which choice you make about what to buy or not. Number 6, the cost of maintaining the old machine versus the new one. That's a differential cost. If you get rid of the old machine, you don't have to maintain it. But if you keep it, you do have to maintain it. So the costs would be differential. They'd be different. And number 7, benefits from the new DNA analyzer. Yeah, there would be benefits if you buy it, but no benefits if you don't. So that would be an opportunity cost. And number 8, cost of electricity to run the X-ray machines. The X-ray machines run at a certain cost, and the new things you're going to buy run at a different cost. There's a differential cost there. So there we go. Clear cut? No, not so much. Okay, reread that chapter a little bit. Let's take a look at number 8. Oh, you'll like this one. High-low method. How many high-low methods do we have to do before you fully grasp the concept? Probably not many more, right? I mean, they could complicate it a little, but the concept's quite simple. Take the highest and lowest and figure out the various cost components, usually starting with the variable cost. So number 8, the bottom of page 52, Hoi Chong Transport Limited operates a fleet of delivery trucks in Singapore. The company has determined that if a truck is driven 105,000 kilometers during a year, the average operating cost is 11.4 cents per kilometer. If a truck is driven only 70,000 kilometers during a year, the average operating cost increases to 13.4 cents per kilometer. That's because they're spreading their fixed cost over fewer units, right? The more kilometers they drive, the less the fixed cost per unit. I hesitate to say that, but true, right? They're spreading their fixed cost over more units. So the first requirement, using the high-low method, estimate the variable and fixed cost elements of the annual cost of the truck operation. So we only have 2 data points. We have the high and the low. We don't have to go through January through December. We just choose the high and the low. The difference in terms of units, 35,000 kilometers. In terms of cost, 2,590 is the difference. So if you want the cost per unit, you put the dollars on top. I guess these would be Singaporean dollars. That's geography, right? Geography, Singaporean dollars. They have dollars in Singapore, but they're Singaporean dollars. And so it's 25.90. Oh, one thing you cannot own in Singapore. What's one thing you cannot own in Singapore? You'll be fined if they catch you with this. Gum, yes, chewing gum.
Huh?
Yeah, chewing gum. The people in charge, or the person in charge, there's one guy in charge in Singapore, no chewing gum. Because they don't want you spitting it out on the sidewalk. It looks messy. Yeah. So I was in this restaurant in Singapore one day. You know how when you pull in your chair, you put your hand under it and you sort of pull? Gum. Yeah, I got a handful of gum when I tried to pull in the chair. Somebody's breaking the law. I told it to the waitress. She said, gum? Gum? Really? Really? So that's my little Singapore story for the day. So where are we going with this? Oh, yes.
They'll hold you at customs too if you have it. Like if you're traveling from airport to airport.
Oh, yeah.
You have gum, they don't want it in the airport.
Oh, yeah. probably can't even buy it in a kiosk, right? I guess Doublemint doesn't get much business in Singapore. Yeah, yeah, it's a clean country though.
Very, but they let their animals roam freely.
Oh yeah,
Yeah, so you can just walk on the street and be
chickens.
attacked by a baboon.
Oh, I haven't seen baboons there, but
Yeah.
chickens, they have chickens, I know. Yeah, yeah, especially in the Indian part of town. Because there's like a little India and stuff. They have all these really nice Indian restaurants. But there's a few chickens running around. There's like historical, cultural reasons for that. So, it's not on the CPA exam, why discuss it, right? Trying to interdisciplinize the course. So anyway, when we do this, what do we get? We get 105,000 kilometers times 0.114 per kilometer. And we get 70,000 times 0.134 per kilometer, 9380. So the variable cost, 2590 divided by 35,000, 0.074 per kilometer. So that's the variable. And if you know the total and then you know the variable, you should know the fixed, right? Because that's whatever you need to balance that equation, y equals a plus bx. And so the fixed cost per year for 105,000 is 11,970, which we got up there. And then less the variable portion, 0.074 times 105, 7770. And so the fixed cost is 4,200. And if you use the high or the low, you get the same number, 4,200. So for part 2, express the variable and the fixed cost in the form of y equals a plus bx. Well, there we have it. It's 4,200 plus 0.074x. And for part 3, if a truck were driven 80,000 kilometers during a year, what total cost would you expect to be incurred? Well, X would be 80,000. So you just plug in whatever the fixed cost is 4,200, 80,000 times 0.074. So the total cost 10,020. Yeah, the nice thing about doing it this way, breaking the fixed and variable, is you can project what your total cost is going to be for any level of activity, as long as it's within the relevant range. He left his stuff, so he's coming back, presumably. Okay. That's it for number 8. How are we doing time-wise? 8:40. Yeah. Well, it's time for a 10-minute break, except you're supposed to get 15. Well, somebody told me 15. I think it's a student.
Yeah.
Yeah, I gave you too much that time. That was 20 minutes. I gave you 20 minutes last time. 10 minutes this time, so it averages out. Right? And I don't know where the 15 came from anyway. Some student told me that 20 years ago that we're supposed to have a 15-minute break.
So you just changed it this semester?
No, I could make it 17 minutes or 12 minutes, I guess. I don't know. The thing is, the longer the break, the less learning opportunities you have, right?
I see why they had you do this part first. Because you get super excited about it.
I do. I can't stop. It takes me a while to put the brakes on and calm down and stuff, you know? And then, like on the way home, I'll be thinking, oh, yeah, that was great, but I should have presented it this way instead. I think about all the suboptimal presentation moments, you know, like, oh, I should have done it this way instead of that way. Oh, I should have told them that story. And so there you go. That's what I think about on the way home. You know, you're sitting for a red light, waiting for it to turn green. What do you think about accounting, right? Oh, okay. So again, we covered a lot of territory. We covered up through 8. We didn't cover everything that's on the syllabus, but a lot of times there's just not enough time. And so we covered a lot of stuff. So the thing is, and I'll ask you this question now that you've seen what we can cover in terms of number crunching. The 2 options, should I start with the slides first to present a nice overview of the chapter and then crunch numbers? Or should I just forget the slides and crunch more numbers but without any intro? How many want me to start with slides? Show of hands.
Yeah, the way we did today was great.
Yeah, okay. So, how many want just the numbers? Show of hands. Okay. I mean, I love crunching numbers, but I'd like to give overviews too. And we crunch some numbers too, even when you look at the slides, you know. So, I mean, if there's a groundswell of support for one or the other, I'll do it either way.
Because if we get the view and understanding the numbers, we could figure it out.
Yeah, yeah. And the goal here is to dump as much information into your brains as possible and have you absorb it. And if I can do that with slides, I'll do it with slides. And if I can do it with number crunching, I'll do it with number crunching. It seems that you're outnumbered, man. Everybody else wants slides. Yes?
Do you think the stuff will connect will be sorted out by Sunday?
Oh, yeah, for those in cyberspace, will this connect glitch be sorted out by Sunday? Maybe. It's Wednesday now, and they've entered into conversations today. I don't know that the dean called the person from McGraw-Hill. It might already be solved, and she hasn't told me yet. Or maybe it's insolvable. I don't know. And what they're trying to do for those who rented the books, they're trying to have some kind of special deal, because if you bought the books and you got the Connect, you got 2 books for the price of 2 books. And so, yeah. Yeah, if you buy it new, there's supposed to be a little card in there that gives you the, yeah. Yeah. Yeah, the dean and well, the dean is trying to solve the problem. I think maybe, keep wanting to say Prentice Hall. McGraw-Hill, they're probably trying to solve it because they want the business. Well, they want everybody's business. So, yeah.
Yeah, FSU bookstores should definitely be trying to rectify that, or else people will just go to Amazon where it only costs $29 to rent the book this semester.
Really? 29? Oh.
They do the whole semester on $100.
Oh.
Do you get the access?
No, but my point is, like, if FSU wants to keep y'all buying the books full value or renting them, as opposed to going to a cheaper market, then they should be able to rectify scenarios like
That's
this.
true.
Yeah,
They can,
it's a market process at work, right? If people stand to lose money, they'll find a way to solve the problem.
I think it's worth just having this and the Connect, so you can like flip through a hard copy.
Yeah, I like hard copies, but you can't do word searches. But
Yeah, it's 130.
You can write on Amazon for $29.
yeah,
No, just the actual book, if you wanted the hard copy.
Yeah. Amazon rentals.
yeah. Well, whenever I want to buy something and I hesitate because of the price, I just say I'll take it out of the grandkids' inheritance, and then I feel good. The grandkids might. Huh? Okay, so we may cover some of these additional ones from Chapter 2 if time allows. Like next week, for instance, we're doing Chapter 3. If we're able to cover everything in Chapter 3, we have time, I'll go back and do Chapter 2 stuff. That's the modus operandi, which is a fancy way of saying that's where I do things.
So can I ask you a question?
Oh, we already did. Go
Are
ahead.
you gonna hold us accountable in case it doesn't go resolved by this week?
Yeah, if the issue with Connect doesn't get resolved by this week, I'll just give you more quizzes with a deadline that's in the future someplace. Sometime. So, yeah, so for those who have Connect, have access, I'll take whatever grades you get by 11:59 p.m. on Sunday, because that's when the quizzes are due. For those that don't have the Connect thing yet, I won't hold that against you. I'll just make more quizzes.
Well, everybody can get the temporary, like, maybe it's only what you made. That's a little bit.
Oh, okay. Yeah, I forgot about the temporary thing.
And then they'll
Yeah.
drop after that. I don't want to.
Yeah, I mean, I don't want to deprive anyone of an opportunity. That's the thing. So we'll figure out some way to do that. Okay, well, class is officially over. Thank you for staying and not throwing eggs and tomatoes or whatever.
We have some questions about the quiz.
Oh, I'm hearing voices in cyberspace. What?
We have some questions about the quiz in the chat.
I heard the voice, but I didn't hear what you said.
We have some questions about the quizzes in the chat.
What did she say?
Question about the quiz and the
Oh, okay. Yeah, I won't turn it off then. After these noisy students leave and go to the bars or wherever they go, I'll hang around so I can hear your voices.
I mean, we're kind of not just barely starting to form. It's not great.
I think it's really, this term is like they're shopping and doing things like that shopping because they're not using a bunch of terms that they're not familiar with. So like, when you do this in term like.
Dr. McGee,
Yes.
can you answer the questions that are listed on the chat, please?
So this test, this first one.
Yeah. I'll answer them as soon as the other students leave because there's extra noise in the classroom at the moment. Okay, go ahead. I think I can probably hear you now. What were your questions? Are you still out there?
Yeah,
Hello?
this is Rajesh. We have some questions on the chat. Are you able to see those on your side?
Can you see the questions on the chat?
The questions on chat? I'll see if I can dig those up somewhere. Let's see, chat. So yeah, here it is. Okay, the questions on chat. Just a tip for anyone who's watching this, I connected my laptop directly to my TV through HDMI cable. Makes it really easy. Okay, that's good to know. And then from John to everyone, thank Martin. I was attempting to cast a recording to my TV last week, so I never considered that. Okay. Then the next one from Demita Joe 82, Dr. McGee, can you explain the quiz requirements again? Okay, yeah, I can answer that one. For each class, there'll be 2 or 3 quizzes, probably 3. They're available on Connect. You have to answer them by 11:59 p.m. on the Sunday after the lecture. So the quizzes for Chapter 2 are due this Sunday at 11:59 p.m. New York time. Do as many as you want. I'm only going to count the top grade. So if you do all 3, I'll take the top grade. If you do only 2, I'll take the top grade. If you do only 1, I'll take the lowest grade, which is also the highest grade. There's generally 10 questions on a quiz. So far, that's been the case anyway. There may be more in the future. Again, if you do all 3 quizzes, 2 of them are going to be learning opportunities because the grades won't count for the lower 2 grades. It's only the top grade that counts. So you get 1 grade and 2 learning opportunities.
So if you take the practice, that gives you better prepared to take the other.
Well, yeah, I gave a practice quiz at first, but then I decided not to do that because they're all going to be practice anyway, except for the one with the highest grade. You know, that way, if you get 100 on the practice quiz, the grade will count.
Okay, so if I get 100, I get 100.
Well, yeah, if you get 100 on the first one, you don't have to do the others. I would suggest doing them anyway because they're learning opportunities. You know, if they ask you easy questions, maybe the second and third won't be easy, but they won't count against you. It's more learning opportunities.
Actually, I'm registered for 2 of your accounting courses. And I was out of country. I just came back last night, actually at midnight I reached home. So I have to buy the Connect for both of them. And for if you can tell me the deadline for quiz 1 in 550.
Oh, and 550 for the accounting 550 course, there aren't any deadlines really.
You don't have?
No, for the accounting 550 course, no deadlines. It's an 8-week course. You're supposed to finish by the end of week 8. If you don't finish, you get an incomplete. For accounting 550, it's 3 quizzes per chapter, same thing, except no deadlines for accounting 550.
Thank you so much.
Yeah, you're welcome.
So, but I have to buy 2 Connects.
Yeah, the Connect is different for each. Yeah.
It's very expensive.
Yeah.
Right?
You could call the publisher, McGraw-Hill, and ask them if there's some kind of a discount if you buy 2 different ones.
Oh, okay.
They might have some kind of an arrangement.
Yeah,
most people only do 1 at a time, but they may have a discount if you do it for the 550 course and the 610. That would be great. Yeah, it's worth calling and asking because you might save some money.
Yeah, okay, thank you so
Yep,
much.
you're welcome. Let's see, on to the next question from Rajesh to everyone. Has anyone taken the quizzes yet? I can't answer that one. Are they going to be questions like this or more like multiple? They're going to be multiple choice mostly. And a few people have taken the quizzes. I haven't really looked at the grades yet to see how they're doing. But I know some people got low grades and some people got high grades. They give me a little multicolored graph with a distribution. But there were only 3 or 4 people who took it at that time, so I don't know what the real distribution is yet. And from Martin, everyone, chapter 1, yes, but not chapter 2. Yeah, chapter 2 there wasn't, or chapter 1 there wasn't really a quiz. There weren't any multiple choice for that one, for chapter 1. One of the quizzes says it's graded and the others don't. Is that intended? Yes, because for chapter 1, or the first chapter rather, I had a practice quiz, and then I decided not to do that because if somebody gets a good grade on the practice quiz, it won't count. But if it's a regular quiz and you get a high grade, it does count. Are the quizzes timed? Yes. You have approximately 5 minutes for each question. So for 10 questions, it's 50 minutes. That's 50 minutes. So Martin says 45. It was supposed to be 50, unless there was a glitch somewhere. And that's it, I guess. Any other questions? Says there's more here. What's that all about? No. I guess so. Is anyone still out there in cyberspace? Okay.
Yes.
Yeah.
Yes. Any other questions?
I think you answered them all.
Okay. Well, if you have questions later, send me an email. So I'll stop recording then.